Good afternoon. I'd like to call to order the Finance Committee of the City of Palo Alto, May 19th, 2026. Clerk, please call the roll.
Councilmember Liu,
Here.
Councilmember Burt,
Here.
Chair Lowing,
Here.
all present.
Okay, thank you. We have two items today. The second one is a training session in acronyms that will take a little while. And the first one is an update on the budget. So we'll turn it over to Director Lay.
Clerk, are there any public comments at all?
We do not have any requests to speak on items not on the agenda.
Awesome. Great. Thank you. Good afternoon, Chair, committee members, Lauren Lai, Chief Financial Officer. This item before you, as you mentioned, is full of acronyms. It relates to the city's retiree health benefits. Every 2 years, we do an actuarial report. And as you may recall, Chair, we were on this committee a couple of years ago, and I just want to acknowledge with you and for staff that we really took note of a process improvement 2 years ago when this report came later in the process. So we have advanced it, did it earlier, worked with the consultants, and have incorporated the updated figures into the proposed budget. So this afternoon, you'll hear a summary of the fiscal impact from staff, and then also the consultant will do a brief summary of the actuarial report. So our presentation is fairly brief, and so with that, I'll turn it over to Kayla Shapiro.
Good afternoon. Are you able to hear me?
Loud and clear.
Thank you. All right. Good afternoon, everyone. Kayla Shapiro. I'm an analyst in OMB. And as Director Lai said, I'll run us through just a quick high-level summary of the financial implications, mostly of this valuation. Can we please go to the next slide? Great. So just a little background or a reminder, since we only do this every other year. This report basically gives us a status update on the health of the funding status for retiree health benefits and tells us what we can expect to pay for the next few fiscal years. We do have projections going out a full 10 years, so we do incorporate this also into our long-range planning. This most recent valuation is as of June 30th, 2025, and it is informing the budgeting for FY27 and 28, in addition to providing those outer forecast years. Next slide, please. So now that we know what we're dealing with, let's talk about results. Between fiscal year 26 and 27, we're seeing about a $3.5 million increase in costs for these benefits. This cost escalation and overall funding for this benefit flows through the departments and funds via allocated charges. As Director Lai mentioned, I'm just going to repeat because it's important. The costs for this valuation are already included in the FY27 proposed budget before you. This is not an action that requires additional appropriation. And the other items to quickly draw your attention to are, although the unfunded liability or the debt on this benefit has increased, the city's funded status improved since the prior valuation. So the plan is better funded than it was previously. Our ratio of assets to liabilities basically has improved. Next slide, please. So there are a few factors that influence our funded status, like investment performance, city contributions, and how our liability grows compared to our assumptions. In this valuation, what stands out pretty clearly is the positive impact of the council's direction through the retiree benefit policy to fund this more aggressively to reduce our long-term liability. So similar to the Section 115 funding on the pension side, Council has also directed staff to use alternative assumptions here, like a lower discount rate to guide OPEB contributions in excess of the actuarially determined contributions. So here, instead of a 6.25 discount rate, we are funding based on a 5.75 discount rate. And with that, you can see in this table here, the very last row, we are on track to meet our goal of 90% funded by fiscal year end 2036. Next slide, please. Whenever you have a moment. Thank you. So For this item, our recommendation is just that the Finance Committee review and accept this valuation and recommend to City Council funding the ADC for 27 and 28 and incorporating this into our long-range forecast. I'll hand it over now to Drew Ballard of Foster & Foster for his presentation. Thank you.
Good afternoon, everybody. Can you hear me? Okay,
Yes, we can.
Yes.
awesome. Well, that was a great intro by Lauren and Kayla, and I've worked with them quite a bit over the past several months to go over some of the details in our long report. And what we wanted to kind of do today was just go over some highlights from this valuation report. If you want to actually, you can skip the next slide. I think Kayla pretty much, actually one thing on here that Kayla didn't mention, just when we determine in any actuarial valuation, we're looking at a snapshot of the census information and the assets as of June 30 of 2025. We do these valuations every 2 years. When we're developing those recommended contributions to the trust and the actuarially determined contribution, similar to your CalPERS pension, they're really comprised of two main components: the normal costs and the amortization of any unfunded liability. And the normal cost is really, I like to think of it two ways. What's the cost of the benefits being earned in the coming years for your active employees as they get closer to retirement and receiving that benefit? It's, if we were thinking about CalPERS pension, where the formula is based on service and a percentage of your compensation as your actives continue to earn that service, what's the cost of that benefit that is being earned? And the other way I like to think about it is, if I were hired at the city tomorrow and we contributed the normal cost each year on behalf of my retirement, and everything happened the way we expected it to as far as retirement ages, life expectancy, the retirement would be fully funded at retirement. And the other component obviously is paying off any unfunded liability that arises. We can go to the next slide. So we did, I think just include a slide here 2 years ago, and we did this, just kind of a quick brief summary of the benefits provided. Obviously, when folks retire from the city and then have access to remain on the CalPERS healthcare coverage, really when we come up with that OPEB liability, is what's the portion of the monthly premiums that are paid by the city. And what we're trying to do is model those projected future benefit payments out in the future for each retiree, current retiree and future retiree. Generally, the city is covering most of the premium for retiree independence, depending on the group. Group 1, I think, is retirees before 2007 who are getting the full premium. Group 2, I think it's the second most expensive non-Medicare basic plan. So usually the Medicare is still fully covered. And then most of your active employees are in Group 4 benefit, which is the 190 formula from CalPERS. In those 2026 monthly caps, I realized as I was reviewing this, those were actually pulled from the wrong page in the report. Should have been about 1,084 for the single. So a little bit higher in 2026 than what is shown there. That's for, some of your retirees currently in that Group 4, and then all, most of actives that would receive it in the future. And then there is that vesting schedule associated with that group as well, where they're vesting into 100% at 20 years of CalPERS service to receive the full city payment, and 50% at 10 years, 5% for each year in between. If you could go to the next slide. And I just kind of wanted to go talk about this for a second. This, if you've seen any actuarial presentations at conferences or other meetings, this is kind of a fundamental equation just to think about the purpose of the valuation in the long-term planning of the fund. So, you have your premium payments that the city is promising to future retirees. That's the benefits. And really, the ultimate cost of this retiree healthcare plan is going to be those benefits paid on behalf of the city to retirees. And the way that we systematically fund for those current and future payments is through the contributions you're making each year. And then you've got the investment component based on the investment earnings that the fund produces. So really, the valuation doesn't change the ultimate cost of the plan, because that's really the benefits that will ultimately be paid, but really the timing of those contributions based on some things that happen between valuation dates. Premiums change, people retire, at different ages than expected, and those things get updated. And you can go to the next slide now. So I just wanted to talk a little bit about, kind of one important part of an actuarial evaluation, and was important in our discussion with the group this year, is what changed relative to what we expected. And you kind of had offsetting components here where on the liability side, liabilities went up a little bit more than expected, or maybe a decent amount more than expected. And on the assets went up more than expected because there were two really good investment years between valuation dates. The trust that you're invested in earned 11% in 2024, fiscal year 2024, and 12.3% in fiscal year 25. Our long-term expectation based on that trust is 6.25%. So earnings higher than expected, assets went up more than expected. And I think that even the city, based on your funding policy, are contributing more based on that alternative assumptions. But on the liability side, it's important to understand what we're doing as part of this valuation is reconciling what happened relative to our expectations. And that could be from changes in the data, right? Did people retire at different ages than we expected? Are people living longer? But really what drove it, this valuation, is those CalPERS premiums in 25 and 26, which was what the most recent 2 years of known premiums were that we used in the valuation, increased quite a bit more than our expectation, especially for those plans that were not non-Kaiser and the Medicare eligible employees or retirees. And if you go to the next slide, we can kind of see this, which, depending on safety or miscellaneous, accounts for 50 to 65% of your group. What I would kind of point your attention to is the line at the bottom, the last three up, that PERS Platinum 2025. This is a very popular election for retirees age 65 plus. The premium went up 30% in that year. Okay. Our expectations usually, I think, was about 7.5%. So it went up almost 25% more than what we were including in our previous valuation model. Next year, 14%. So it really went up 45% instead of 15%. So 30% higher than expected. That increased, obviously, the premiums that are being paid by the city on behalf of the retirees, and increased that liability. Kaiser didn't go up as much, right? 6 and 4%, a little bit less than expectation, which is about half, maybe, I can't remember, 35% of your group for age 65 plus. So that's really what drove the increase in the liability, was just CalPERS premiums going up more than expected, especially for the 65 plus group, which the city's really paying, the full premium for most of those folks. So we've touched on that in our meetings, and I did think it was important to cover that here as well. Next slide. So just kind of wrapping up, and Kayla talked about the actuarially determined contribution that's already in your budget. We do show two different numbers for the city and the valuation. The baseline, what we call, which is actually based on that expectation of 6.25% discount rate in an 18-year amortization period. And there you can see the total actuarial determined contributions, about 19 million for the next 2 years, based on the most recent valuation results, up from 16.5, 17 million. And if you go to the next slide, what's important to keep in mind, different than your CalPERS pension, is that actuarial determined contribution is not the total contribution from the city that's recommended to the trust. You satisfy the ADC by the combination of the benefit payments made, which are usually made out of the general fund or something similar, depending on the city. But really, you paying those premium reimbursements on a pay-go basis, that satisfies the portion of ADC. And then anything remaining would be recommended to be contributed to the trust to contribute 100% of the ADC. And really what you see on this baseline basis and that bottom line is the ADC less the expected benefit payments is right around zero. So if you were funding based on 6.25% in an 18-year recognition of that unfunded liability, we would basically say the benefit payments are sufficient to cover the ADC. You don't need to budget additional trust contributions. But on the next slide, which is what Kayla showed, was based on the city's actual funding policy, which was, okay, let's give us an alternate budgeting, a more conservative budgeting, which is based on the 5.75% discount rate. and actually spreading that unfunded liability over 11 years, where you can see the ADC, the actuarially determined contribution, is now higher. When you subtract out those benefit payments, that trust pre-funding column is really what we're recommending is allocated from the city's budget to the Section 115 trust to continue to pay the benefits that are being earned by your retiree health care members. And you can kind of see again the 10-year projection there. And this is exactly what Kayla showed at the bottom, where 2036 you're at 92% funded. And that really wraps up what I wanted to talk about. Like I said, Kayla did a good job providing a summary. Just wanted to go over some of the more actuarial related concepts and what changed, since we did this 2 years ago. But I'll take any questions or turn it back over to you guys.
Is there any public comment on this item?
We do not have any requests to speak for this item.
Okay, questions of, I guess we should go in order. Okay, yep. Pat?
Yeah, on slide, I guess it's 6 of the last presentation.
Last presentation.
The list of all of the medical provider options, are those all stipulated by CalPERS, that's a set that is everybody under CalPERS is obligated to offer?
Yeah, that's based on the healthcare options that they're providing under CalPERS PEMCA.
And so
And I think those are the region 1. We're in region 1 here, right? Those are the changes in the region 1 premiums by health plan.
So seeing the 30 and 34% increases for the PERS Platinum and PERS Gold, are you aware of how CalPERS might be responding to those enormous increases? That was a 2025 increase, but
I know that they, go through. Sorry, I turn my video back on. I know that they go through, and actually, I think this week they're going through their preliminary renewal. Their healthcare renewal. I mean, they're, guess what would you call it? Negotiating with the providers. And I'm not exactly sure what they've done specific to those plans. Those are Medicare supplement plans. So you can see the last 4 years, right, have been pretty high, but 2025 was kind of the outlier. So, I do not know specifically for those ones if CalPERS has made any changes. I just know that right now they're going through their process of renewing rates and discussing that with providers. And then in July usually is when we get the premium, the preliminary premiums for 2027 to see how those change. And hopefully, we start to see some more realistic, more beneficial increases from year to year.
okay. And then for our staff, the numbers that we have projected here, they're all baked into the long-range financial forecast. Is that correct?
I'm sorry, can you repeat your question?
The numbers that we have projected on our future costs, those are already baked into the long-range financial forecast. Is that correct?
Jonathan Ruers with OMB. To answer the question, so we got this actuarial report after the LRFF. So what we did as part of the budget is in this fiscal year, we did update it based on these current costs. So it's good that we're in front of it. We will update the next LRFF that will come to you in the fall with this updated actuarial report. And likely, since we're seeing kind of this $2 million bump between reports, we will also include that bump each time we get an actuarial update. So the next LRFF will include this actuarial report to actualize it. We will also likely include a little bit of a differential because we're seeing report over report that things are still bumping up between the prior projection.
Okay, and that answers part of my next question is what are those changes and how are they going to impact our forecast? So FY 27, it's included, right?
Yes.
But beyond that, we had the old numbers. So how much more do we think per year we're looking at?
So we did increase in this. We included. It's just if you look at the difference, it's just over $2 million. I think it's around 2.3 million. So that is included. So we've essentially actualized this report for the fiscal year 27 budget. Typically in the LRFF, we would just include the full actuarial report. So there's probably a difference between 27 and 28, and it's probably closer than it should be. So again, when we update the LRFF and come to you in the fall, 28 and the 10 years after will include this report that you're seeing today. Once you accept it, we'll integrate it into the LRFF. We also are going to recommend, and we'll talk about this when we get to the LRFF, that these reports are still running higher each projection. So we should probably account for that in a future LRFF.
Yeah, I mean, we saw with the budget actions that we're taking that we've basically greatly reduced the future deficits, but then this jacks it back up. Okay, I just want to make sure we're all being aware of that. And then lastly, can you just walk me through on our slide 3, where we have an about a almost 4 million increase in the unfunded liability, but the funded status is improved by about 5 percentage points. So explain how those two things work in kind of counterintuitive ways.
Kayla, did you hear that question?
Yes, I did. I would be happy to give that a shot. So it is seemingly contradictory, certainly, because our unfunded liability has grown. The key here is our funded ratio, or our funded status is a ratio between our assets and our liabilities. So what you're seeing here in the unfunded liability growing, that is true, our liabilities grew, but our assets grew faster than our liabilities. So that's how you can see both of those things happening.
Okay, thanks.
Chair and committee member Burt, Sandra is available, Sandra Blanche, to answer or attempt to answer the question regarding those retiree Medicare premiums, if you'd like. Sandra?
Thank you for the question. As Drew mentioned, CalPERS does reevaluate year to year the rate increases and negotiates the plan premiums as the participation in the plans increases or changes. With the PERS plan, that is a PPO, retirees are use that plan because they move out of state. Many of the HMOs are not available out of state. Kaiser is only available in California, Washington, and Hawaii. And so I think in Colorado. And so that is the lowest plan that's available. But if a retiree doesn't live in one of those states, then their only choice is PERS Platinum. And so the rate of participation increases, and therefore the premiums increase because of the number of participants. But they did make adjustments, and that's why in 2026, we saw the premiums go down slightly, or the participation in PERS Platinum go down.
Oh, so now have a follow-up question where we're looking, and this is slide 6 of the of the Foster and
Right.
Foster, where we have increases in the Medicare eligible. Is that an increase in the rate or in the absolute dollars that would reflect participation rates as well? It must be the rate, because I see the PERS Gold went actually down slightly in the increase, but well, anyway, if you can explain that, is that what's in those columns? Is that the participation rate or the dollar amount increase?
No, that's the rate percentage increase. But on the CalPERS side, they're determining the rates based on participation numbers. And so when the board makes decisions on the rates year to year, the participation numbers is a factor in determining those rates.
Oh, in determining the overall rate, then you're saying, not the,
Yes,
okay.
the overall rate.
So more people picking accounts that are going up in costs more is driving up the overall rate.
Yes, and that's statewide, right? Or all CalPERS health plan participants.
Mm-hmm. Well, it is interesting that the PPOs, whether it's because of people moving out of state or otherwise, are jumping up a lot more than, for instance, Kaiser as an HMO. Okay, thanks.
Before we move away from that, back to that number one slide, what is the cost escalation? Is it just outside decisions, or I asked that for two reasons. One, I just want to know, and secondly, is there any way to help that we see hints of what it's going to be next year as we monitor things? So when you say cost escalation, is that just fees that were being charged, or what's the components there?
Sandra can respond. I see her online.
I mean, usually it's medical treatment. The increases in medical treatment. And as Drew mentioned, as far as 2027, this week, in June, CalPERS Health Committee, the subcommittee of the board, will be reviewing the staff recommendations for the 2027 rates. So we'll know in mid-June what the 27 rates will be.
Okay, so the $3.5 billion in dollars means that, overall, our retiree pool cost more to take care of is the starting point there. Is that what you're saying? And somehow that got to 3.5 million.
Well, I'll let Drew speak to that. He outlined the coverage for our retirees. And we have various tiers as we've tried to ensure a cost-effective retiree healthcare coverage. We have various tiers. He started by saying that our older retirees, our tier one retirees, are paid 100% of the retiree healthcare premium. And that subsequently has been reduced. But if you could speak to the actual dollar amount, Drew.
Yeah, what was the 3.5 million again? Was that from the city's summary of the change in the budget?
It's under
Yeah.
the first slide we got called valuation impact summary.
Yeah. So Drew, we're looking at the year-over-year cost increase of the ADC at the 5.75, like city policy level.
Okay. Yeah, so really that's driven by the development of the ADC under that city policy with the 11, last 2 years ago, we were using a 13-year unfunded liability amortization. Now it's 11 years based on that policy, but the unfunded liability, as we saw, went up a little bit. So you have a 13-year payment on a smaller loan, if you will, debt payment. Now you have 11 years. So the unfunded liability payment went up, and then that normal cost that I talked about went up as well because of those premium increases. So that that's really that change of 3% or 3.6 million is the increase in the actuarially determined contribution between the 2025, I think the 2023 evaluation where we showed that 10-year projection and the updated valuation with the new premiums. So I think it's just the impact of the ADC between our two valuation dates.
Okay, I might understand that. Thank you. And then related to it, I mean, I get the ratios but the fact that we actually went up in dollars, even though we got better in ratios, does that suggest that we should contemplate doing an amendment to the next 2 years so that we start putting more cash in, or are we still just comfortable with the pace that we're at towards, I mean, I looked at the graph. Are you comfortable? I guess I'm saying, is staff comfortable?
Yes, great question. I think these are the kinds of questions we should focus on it from a policy perspective. So, Clerk, can you put up the Foster and Foster slide 9? So as noted by Drew, this table outlines the implementation of the city's policy, and in particular, calling your attention to the last row, which is in 2036, we are anticipated based on these assumptions to reach a 92% funded status. You know, we have that 90% goal. In order to achieve that, the trust pre-funding column, that's the amount that we would pre-fund the trust in order to get there. So it's very important for us here to meet the numbers in the total column every year in order to get to that level. What we will do every 2 years is this report and get affirmation by the committee to recommend that we continue this course. And you may recall a couple of years ago where we took 2 steps to implementing it. At this junction, we're not recommending that. Is to, you know, let's implement the updated actuarial report. We've incorporated it in 27 based on the information we have so far and that you'll review later this afternoon. We've rebalanced the general fund, right? So we're not recommending to not be consistent with this. But I think what we have also discovered that in 2 years now, the last 2 reports, this report and the last report, we've seen notable increases that we need to start incorporating in the long range financial forecasts every 2 years. So it shouldn't be a let's wait and see, but I think we need to put in a factor for that. And then above and beyond this, because typically what we do is we take this report and we build the 10 years based on this table, right? But then every 2 years, if we get a report that says, oh, it's a little bit more expensive, then our long range is tweaked out of whack. So I think what we're learning from this is we need to get these reports sooner so we can incorporate them into budget development, which we're doing now. And in addition, augment our assumptions in the out year. So every 2 years, we have another bump for this. And then I think that'll help policymakers kind of decide some of the trade-offs in terms of this policy. Does that help? So I think at this junction.
Yeah, very much. I mean, the fact that we went up in total cash or in total liabilities is kind of a yellow flag, but not a red flag or red flag with 2 exclamation points. So we can go another year.
Right. So we'll implement the policy, knowing that there's some trade-offs because there are other services and other things we can attend to. But right now, we recommend going forward with this.
Okay. Thank you. Let's go over to George. I sort of usurped you there because we were on the right slide.
No, that was helpful. I will ask a question that I think I know the answer for, but within healthcare, we can't incentivize Group 1 retirees or Tier 1 retirees to pick Kaiser or Gold instead of Platinum or anything like that with additional payments or benefits or anything like that, right? Like, I'm not sure if there's some active way to manage those costs.
I don't know if Sandra, you want to respond on employee retiree selections and how that works?
Well, selection, as I mentioned, usually depends on where the retiree lives. And so there's limitations to their plan selection depending on where they live. And so there may not be an incentive that to make them change from PERS Platinum because that may be the only plan that's available out of state. And then there is, you know, an equity rule that PERS has, and you know, one our ability to, you know, offer a retiree more than active employees is somewhat limited, and I think is also a legal concern because then what I've heard from legal is that, you know, we could be challenged if it's seen that, you know, we're not offering the same retiree contribution that we had committed to.
Right. I mean, I know not all plans will be available for all people, but if the majority of people who are retired from Palo Alto live somewhere on the West Coast, they could be covered with Kaiser, and maybe paying them $100 a month to use Kaiser instead of PERS Platinum could be a win-win. I'm not sure for at least those Group 1 retirees. I realize there could be a lot of legal issues, but there may be some active way to manage those costs. And so how do the increased healthcare costs get reflected on the table in slide 9 exactly? Is that that I was a little bit unsure about, because I see where the ADC is. I see how the contribution is calculated as a percentage of payroll, but the larger report was a little bit dense, and I can't quite see on table on slide 9 how healthcare costs actually trickle in.
So
Yeah,
Drew,
I think
maybe
that,
you'll
I
want-
should take that. Okay.
Absolutely.
If we can actually go back to slide 7, I think it'll be helpful because it's done under a similar mechanism, just different discount rate, different amortization period. But what I talked about when I was looking at actually slide 5 with the gain loss is, what did we expect the liabilities to be if the premium increases from CalPERS were based on our expectation, which was for non-Medicare 8.5%, 8%, for Medicare
Yep.
7.5%, 7%, but they went up more than expected. So when we update our model with the new data and the new premiums, now that liability, and just keep in mind when I say OPEB liability, right, is what we're trying to do there is model how much do we think the city is going to pay on behalf of retirees based on those premium payments, right? So those have gone up quite a bit than expected. Therefore, the benefits being paid by the city have gone up, the liability goes up. So that's part of the unfunded liability calculation. And the other one is the normal cost. And here you can kind of see the change in that normal cost from valuation to valuation based on those premium increases now being higher, which means and the normal cost is only for active members, but now when they're projected to hit retirement, their benefits are expected to be higher because we expect, some percentage to elect Kaiser, some percentage to elect PERS Platinum.
Mm-hmm.
And now their benefits throughout retirement are higher than what we thought they'd be 2 years ago. So we have to update how much needs to be funded each year, essentially to pay for those benefits being earned or accrued as these active members get closer and closer to retirement. So it's kind of two-pronged in the normal costs where you can see the impact there.
Okay.
And then the unfunded liability payment. So this is based on a 6.25% discount rate and 18-year amortization, whereas 2 years ago was 20 years. And then slide 9 is 11 years versus 13 years and spreading out the difference in the unfunded liability and then also the difference in the normal cost. So we're adding up the same components under different assumptions to get the ADC.
Okay.
And then also we're projecting out those premium payments as part of, right, the cash benefit payment. That brings in the new premiums. So those are higher than what we would have thought they'd be 2 years ago. And really the difference is what we would recommend the city allocate to the trust based on that policy. So
Okay.
that's kind of how it starts with the liabilities, but then it's funded through the mechanism of the normal cost and spreading out that unfunded liability over a certain period of time.
Okay. I think I can see the math. Yeah, and how that normal cost calculation gets rolled into those contribution columns. And so to the extent that the contribution columns, the total contribution is in ADC are equal to payroll times ADC percentage of pay, that's just because they're, two sides of the same
Yeah, we're just dividing those columns.
yeah, two sides of the same equation, but they are sort of separate columns. So on the payroll side, I also saw that we were assuming a 2.75% annual payroll increase in total payroll. And that also seems like a conservative assumption. So are we comfortable with 2.75% total payroll increase just because we are being conservative which is a kind of aggressive assumption because we're being conservative in our other assumptions? Do we think it just sort of nets out, or do we think that the 2.75% payroll increase is realistic? Curious about that part.
If you're asking me, I mean, 2.75, it can change, right, from city to city or agency to agency. CalPERS, when they do your pension valuation, they use a 2.8% assumption versus 2.75. We use 2.75, but really that's the long-term expectation of how the total covered payroll will change, not in any given year, but over a 15, 20, 30-year period, right?
Yeah.
And really the only impact that has when we're developing the recommended contributions is that unfunded liability payment we're coming up with as part of the ADC. We're spreading it over 11 years, but it's not a level payment like a mortgage payment. It increases with that 2.75% escalation. So it's a little lower in year 1, a little higher in year 11, such that if your payroll increases at the same rate, the percentage of pay stays level, even though the dollar is increasing slightly. That's really the only impact it has on the valuation, that assumption specifically.
Wait, can you say that again? The payroll increase, yeah.
It's really so that the dollar of the unfunded liability payment, if that's increasing at 2.75 and your payroll is also increasing at 2.75, when you divide, right, the payment divided by payroll, you get the same exact 16 point, you get the same exact percentage of pay, because a lot of agencies will look at it as what's the rate, right? What's the contribution as a percentage of pay, and we want that to be flat instead of maybe the dollar being flat.
Okay.
That's the only reason that assumption is even used in the valuation is to spread out those payments of the unfunded liability.
Okay. I'm not sure if my next question will make sense in the context of that answer, but I think just thinking of what comes next, having a sensitivity table of what if the health percentage increases were 9% for the next X years instead of 7 or 8%, and what if the payroll cost increase was 4% or whatever our actuals were, which are of the last few years, which were more than 2.75%, and then seeing with some different plug values at what point do our conservative assumptions around the discount rate and amortization period start to break? Because otherwise I'm not quite sure how to process this, because it seems like we have some headwinds against us, but we are also being pretty conservative, so we don't need to worry too much. So we aren't necessarily advising any course of action. We're just sort of saying we'll monitor this over the next couple of years. But I think having a sensitivity table to understand what does a scenario where we have to worry about it actually look like would be helpful.
Let me see if I can attempt to answer that. I think I always find, to be honest, actuarial reports and the mathematics very complex. And I appreciate the field of work that Drew's in. It's a very technical body of work, and there are very prescribed standards for actuarial reports and studies and projections. And I think one of the important premise is this long view. You know, we see the volatility in the near term, but these reports are designed to look over 20, 30 years. So I think, you know, if I understand the concerns is, are these assumptions precise enough? Are we going to meet our goals? Do we have enough contingencies in there? I think a couple of reassurances is that we do these reports every 2 years. So they're very frequent enough for us to actually continue to benchmark. And slide 9, it's very important because slide 9 shows us as a local city, we have a policy where we pre-fund, right? And so we have a lot of local control and agency over some of these things where we said, oh, we feel maybe we want to roll some of this back, or we want to contribute some more. So we're not just simply contributing based on the standard assumptions of 6.25. We're actually contributing at the more assertive standard, in addition, amortizing over a more assertive standard of a remaining 11 years. So we have these additional standards that even if some of these assumptions were a little too conservative, we've layered on certain things because we have certain objectives we want to meet here. So I hope some of that is reassuring.
Yeah. The takeaway for me still is just that we have enough padding and safe alternate assumptions that we can afford to monitor things year by year. We don't necessarily have to worry about the sensitivity tables for all the potential really problematic scenarios until we get a little bit closer to those scenarios.
I think, Drew, maybe you want to speak?
I just wanted to add one thing, Lauren. You did a great job. But what I wanted to mention specific to the question is part of this 2-year cycle, right? We're looking at the valuation that helps determine the budget. But this summer, this will be used as a basis for your GASB 75, which is the OPEB liability report that will go into the city's financial statements. And as part of GASB's requirements, we are required to add 2 sensitivity figures to those reports. One being, what if the increase in the premiums is 1% higher or 1% lower than our assumption for all years, basically indefinitely? How would that impact the liability? And then also on the asset side of things, what if we earned 1% more, 1% less on our assets? How would that change the net liability? So there is some sensitive figures that are required to go in the city's financial statements that does show you the impact on the liability, right? Which I don't have in front of me, unfortunately, because it's not part of the valuation, but we do have those figures readily available, and they're included in the city's financials. So I just wanted to point that out. The other thing I would say is, like, what we're looking at this year with those premium increases from CalPERS, and I realize maybe even the couple of years before that, things were higher than, this. I don't expect it to be the magnitude it was this last valuation, that when we come back in 2 years, we're going to be having the same exact discussion that, oh my, look at the changes in the CalPERS premiums and the impact on your liabilities. I surely hope not. But, we have no control over that. And you certainly wouldn't expect, year over year increases to be 20 to 30% on average, right? And that's kind of Lauren's point. We're looking at what do we expect the assumptions, the increases to be over the life of this plan or the life of the retiree receiving that benefit.
Okay. Yeah, all fair points. And I appreciate the patient answers.
No, go ahead.
Thank you. So the deeper we dig here, the more questions. On that slide 6 again of the CalPERS premium increases, I realize that we don't see the average there. Is that somewhere else that for averages for the total based on, I assume, percentage participation, and that's based on all of CalPERS participants as opposed to Palo Alto's? I'm trying to understand what this set of percentages is even applying to.
So just to kind of make sure that we understand the percentages, for PERS Platinum for 2025, which is the increase from 24 to 25, that's a 30% increase in the premium that's charged, right? So if it was $500 in 2024, basically saying that for PERS Platinum coverage for a single is now $650, right? That's the 30% increase in the dollar in the premium. I think to answer one of your other questions, the way that those, the claims experience is not specific to Palo Alto. That's being used to develop those premiums. It's based on the CalPERS group in total.
Yeah. So those are the percent increases in premiums. But what's the average increase for all of the premiums combined, which would be a combination of what portion of the participants choose a given plan and what the cost increase is of that plan, right? Or those plans.
Yeah, I'm not sure that we have that really available for your specific group. I know when CalPERS announces the premiums each year, which is coming up, for example, in 2025, I just pulled up their website, and the total basic weighted average change was 9%. And this is across the board, not specific to Region 1, which is what we're showing. And the Medicare weighted average was 22.3%. Again, that's might be a little different distribution than the Palo Alto retiree elections, but that is, I think, at least gives you kind of a barometer of what the average is for the entire group.
And do you know why the Medicare is so much higher?
No, I have no idea. I would probably have to go, possibly go back and listen to one of those CalPERS board meetings, which, I don't know if they go through that much detail on their renewals and the renewal process.
It might be worth, let me ask Sandra, Director Blanche from HR, to describe how the cost is split between the employee and the employer for the various plans, because I think essentially the city's costs are fixed. Now it varies by the tenure of the employee when they retire, but our cost does not go up based on the plan that the the retiree chooses. Sandra, could you expand on that?
Yes. Thank you. So we have 4 tiers. Currently for active employees when they retire, we're paying, I think Drew mentioned 100% for those who are vested, which means that they have at least 10 years of CalPERS service credit.
20 years.
Well, minimum 10 up to 20, and a 20-year, an employee who has 20 years of service will get 100% of a fixed, or well, I shouldn't say fixed, a rate that PERS determines year to year. And then for their family, it's 90%. And so then the retiree pays a contribution depending on their years of service.
So, and I see you struggling a little bit, Sandra. So back in the San Jose system, we used to refer to it as the city would pick up 100% of the lowest cost plan. Now, I recognize that's not exactly the way it works with PERS, but isn't it analogous to that? And as such, when a employee, let's say, purchases up for a more expensive premium, that they pick up the delta.
Yeah, it's set by government code, and I think it's the weighted average of the 4 most common plans.
I'm vaguely recalling
Yeah,
this from long ago.
and so the city contribution amount is set by the government code. Through the bargaining process, we have some ability to influence the vesting schedule that we were just talking about, but the amount the city pays in is not something the city has a lot of ability to
So-
influence.
Those, I think the council, or at least this committee, understanding those things is valuable, but I don't think we have to dive into it today. And maybe we can schedule a follow-up, maybe even just a study session, follow up on this item to really more fully appreciate what's driving this, what things we have control over, what things we don't, what we should expect for the future, that kind of discussion.
Good point.
Could I just make one remark?
If it's helpful.
So let's see. I don't know how I'm bad.
Helpful for clarity. That's what we're striving for.
I did just want to clarify. If, like, for example, the Group 1 retirees, which anybody except for the PAPOA that retired before 2007, the benefit for them is that the city pays the full premium up to family coverage. So if we see the PERS Platinum go up 30% from $500 to $650 per month, the city is borning that entire cost. They are paying that entire increase in the premium on behalf of the retiree. The retiree is not paying anything on behalf of themselves, right? So I just wanted to make that clear for that group, and even really Group 2, especially for the Medicare retirees, because the city it's not a fixed cost. It will change as the premiums increase, and the city's paying the full amount on behalf of the retiree throughout retirement.
That sounds a little alarming in that, it's a Medicare supplemental plan. And so Medicare there is a portion that it's a Medicare rate. And because of, the age of those retirees that far back, they're mostly all Medicare age. And so it is lower than like a new retiree, right? And that is a closed tier.
Okay, I just wanted to ask a question about the discount rate or interest rate. The city policy funding goal right now has a 5.75 discount rate, but that's a look forward based on a look back, or does it change every year or two based on new assumptions or new information? How often does that change, and how has it changed?
That's set in the city's retiree benefit funding policy. So that policy prescribes the goals and objectives and the pre-funding standards for pension and also for OPEB. So
Okay.
that's already prescribed.
Okay. George, anything else?
No, I have nothing else. Thank you, guys.
Okay. We already checked on public comment on this one, right? All right. So I think that is it. Which means we need a motion.
I move the staff recommended motion.
Do we need to put that up, or we can all read it on the first page of the staff report, right?
On slide 5.
Here, our staff report, page 1. There we go.
Chair Lowing,
Yes.
Councilmember Burt,
Yes.
Councilmember Liu,
Yes.
motion carries unanimously.
Thank you very much to all staff who presented. We all came up the learning curve as fast as possible. Now we'll shift to our other item called 27 budget. Yep, back to you.
Wonderful. Good evening again. So this item relates to the fiscal 27 proposed and operating and capital budget. This afternoon, we're hoping committee will wrap up the budget discussion with formal recommendations to the council And that relates to the operating budget, capital budget, and then also the municipal fees. We'll go through the short deck of slides, and also as committee can understand staff's approach, we attempted to incorporate the feedback from council and then also attempted to rebalance the general fund so we could be more efficient in our session this afternoon. Okay. Next slide, please. So just as a reminder, we've had a couple of sessions with this committee and then also 2 with the council, most recently last week on the 11th, wherein staff presented the outcomes of the committee workshops. And for the most part, council really concurred. There was very limited feedback, and we're hoping this afternoon we can incorporate those as you deem appropriate. So we will go back to council on June 15th to adopt the operating budget, capital budget, and then also the municipal fees for fiscal 27. Next slide, please. The format of these workshops is to go through our tentative motions, our parking lot, and then also referrals. So at the end of the today, we will move things from the parking lot to what we will formally call recommendations for Finance Committee budget adjustments. Also seek to get from you a listing of what we are going to call referrals, works that we want to recommend to council for consideration. Okay, next slide. This afternoon, we'll talk about the feedback from council, review the parking lot, share with you our rebalancing attempt, also talk about technical adjustments. What are they? Why'd you get this memo? And then also considerations of referrals. Right? Next slide. As of May 6th, this was the motion committee took. JMZ asking staff to look at that and reducing the costs. School crossing guards, so there would be no reduction starting on July 1st. Consistent service level with the endeavor that PAUSD would match at 51,000. Track watch, similarly, we would continue that service through June with the 50% match continuing with PAUSD as an assumption. I think importantly there for that is that we would want to come back to council by December to talk about contract extension. So we don't want to wait until mid-year on that one. So I want to call your attention to that. OSV committee wanted us to appropriate 384,000. So that'll run it through, I believe the rest of the fiscal year. Yep, through June. And then also nonprofit, the additional direct allocation. So that was 802,000. So we'll explain in the next couple of slides how we rebalance that. Next slide, please. So these are the parking lot items in your agenda package. We have taken the steps that committee wanted us to take, in particular on the quiet zone. The direction was to accelerate the design and construction. So if committee agrees this afternoon, we would amend the CIP plan to have the design in 27 and construction in 28. And that's being funded by Measure K. In addition, Chamales right-of-way, the direction there was to incorporate it in the CIP. So the memo includes a recommendation for your consideration of using Measure B money. 600,000 would be funded in 28 for project management and planning. As it relates to OOT, the discussion there was the incremental benefit of staffing in that department. Memo includes a item for your consideration, which is converting a half-time assistant engineer to full-time. The funding there would be Measure B, but to be transparent, that funding is still not solidified long-term. We're still developing that plan, so just want to make a note of that. Also the discussion about, the police department, vacancies, staffing, recruitment, and laterals. The memo includes discussion about the current incentives that we have for recruitments. However, I want to call your attention that, the police department does recommend having more flexibility on these different programs. We have, a variety of options, but we would like to seek flexibility to pursue other options that may be more attractive. And in doing so, we would need to revise the labor contracts to incorporate some of these options. And from a financial perspective, we're hoping that we can just observe the fiscal impact and not actually need to increase the appropriation. If at mid-year we think we do need additional appropriation, we can handle it then. I think our immediate concern and request is for that additional flexibility to adapt incentives that may be more contemporary and attractive. On the nonprofit, I think that captures what we conveyed to council, which was any additional appropriations should go through the HISRAP process, and then looking at CIP for rebalancing. Next slide, please. So let's jump right to rebalancing. You have an At Places memo, and in the memo, we talked about technical adjustments. So why are we presenting that to you this now? Typically, our technical adjustments would come to you when we adopt the budget. And it is very common to have technical adjustments because the budget is so large, right? We're talking about $1 billion operating budget, which incorporates the capital, and this 5-year CIP is $1.2 billion. So technical adjustments are common. None of the technical adjustments here are significant enough to really, I would say, materially affect your policy decisions. Some of the numbers may look large. I think we talked about the most significant one on May 5th with you, which was the utility one. My other incentive for bringing the technical adjustments to you is because I want to rebalance this with technical adjustments versus making further reductions on programs, projects, or any CIP. So at this point, we feel that we have been able to rebalance this, and I'll just kind of quickly walk you through it. So the top portion of this table relates to the committee actions from May 6th, right? The 802 there. The lower portion here, the quiet zone. So to advance the project, we are going to take measure K funding for quiet zone. And then we are also asked to look for funding to fund OSV, so that way it's not general fund. We're also recommending measure K funding there. And then if we look at Chamales Bikeway, that will be measure B, and that's in 28. So this table here only relates to the general fund. We were challenged to look and review TOT again. So when we took a deeper dive, we decided it would be reasonable to increase the TOT by about $542,000. Now, you may recall we also have the allocations to CIP because of the new hotels and how we allocate certain dollars to capital. So this TOT increase looks at the total TOT in the budget, which is about 30 million, and looks at that mix. So 100% of this is going to CIP. Now, you did ask us to reduce CIP. That was in the parking lot. So to balance this budget, we are also going to reduce CIP by $402,000. In your attachment A, we have a lot of technical adjustments, but the aggregate of all of that is about $16,000 for the general fund. This would then balance this budget if you just took all this into consideration. Okay. I know you'll have questions. Thank you. We've worked very hard. I get and have the privilege of representing this body of work, but lots of people have worked behind the scenes. So again, our effort to present the technical adjustment is recognizing we do want to preserve services, programs, and projects. And I know you might have questions on the At Places memo, but if I may, I'll proceed to the last few slides and then turn it back over to you, Chair. Next slide, please. So the revised 27 budget would look like column 2. So revenues would increase by about 600,000, expenditures 200. The 1.4 million is really an accounting treatment of the Measure K money, since we're using $1 million for quiet zone and about 380,000 for OSV. Budget stabilization reserve, our projection is that it'll land between 17 and 18% in fiscal 27. Okay. Next slide. I'll speak to these quickly. They are in your memo. There are additional clarifications and items for your consideration. The employee child care program, we heard that we should incorporate that in long range. So that'll be funded by the general benefit fund for the next 3 years. And then thereafter programmed into the various funds, including the general fund. Heritage Park, we heard there should be a notation regarding the park drainage improvement related to the Roth building water intrusion. Document transfer tax, we had a discussion about that revenue at risk. There's a larger discussion on that relative to it in the memo. Important to point out that should this initiative pass, it would also preclude the city from re-upping the DTT before the voters. So that's very important to note there, okay? So
You say that again, it would prohibit us from going back to the voters?
correct. So we'll definitely follow up on that. But I wanted to call that out. I've got about one more slide because I'm sure we'll have more discussion on that, but yes. The administrative assistant to the council, we heard the discussion on May 11th, the concern that the 30,000 would bring us to December, but the mid-year report is in February. So something for your consideration is we could fund it through the end of March, which is carrying over another 15,000. And that'll allow the council to deliberate it at mid-year to determine if that's something we continue or evaluate that the pilot was informative, but discontinue. So that's something for you to consider, is another 15,000 to carry that over through March. Tree trimming and canopy, we have in the report additional information. Important to note here is the collaboration between the city and the nonprofit, and also to continue to focus on tree trimming and also as our priority, and then any impacts might be on some long-term plans. Last but not least, discussion regarding the irrigation at Foothill. While we've had a lot of discussion, we want to memorialize it in the memo just for ease of reference. Next slide, please. So in your packet, you have the At Places memo, keeping in mind that on June 15th, when we go to council for the full resolution, we'll have the formal technical adjustments. The formal technical adjustment also includes the CIP reappropriation process. So this is a preliminary look for you because it is our focus to rebalance the budget. Likewise as well, we have different committees that support us relative to our budget. So Stormwater Management Oversight Committee reviews the stormwater management fee, and also PTC, which reviews the CIP. This year, the timing of the PTC meeting will happen on May 27th. So their review and letter will come to the council directly. Typically, it would come here if the timing worked out, but this year it'll come to the council directly. So next slide. Slide 11, we heard on the 6th that committee wants us to work through this. We can certainly receive this as is. We could take some of it and recognize some of it is in fiscal 28 budget adoption. So there really isn't a specific work plan. But if you wanted to clarify this any further, we're happy to also include this in the council memo on June 15th. Next slide relates to utility rates. Column fiscal 27 is the proposed rate. However, I want to call your attention. Specifically, the Finance Committee voted unanimously on the electric rate going from 6 to 4.5. So what we did in the technical adjustment and rebalancing the budget, we revised the figures on the 4.5 rate increase for electric, and we flowed that through for our utilities user tax rate and also our appropriation for costs. So the rebalancing that you see before you and some of the technical adjustments also incorporates the assumption that council will ultimately adopt the electric rate at 4.5. Given that, Finance Committee did unanimously approve that. So we wanted to flow those through so we can make the adopted budget as accurately as possible. I think with that, next slide is just reminding us that we want to move things from the parking lot over to the recommendation so we could carry that to council. And very last slide is to see if chair and committee have questions, and we're happy to bring this to the finish line.
Bet we have questions. Let's see. How about public comment?
We currently have one request to speak. Our first speaker is JPR. One moment, please.
Hello, my name is JP Renault. I'm the Executive Director of Canopy. And first and foremost, I want to thank the city staff and acknowledge how hard this budget is. And I want to acknowledge that ultimately we're still in partnership together. Thank you all again for taking the time to hear all of us throughout this budget process. I know you've heard a great deal already about Canopy, community forestry, and the importance of Palo Alto's urban forests. So I'll keep this brief and leave you with this one final note. A 10% cut to our contract is a 10% cut. Even if those reductions are ultimately directed towards parts of the contract perceived as less directly tied to tree planting and care, the impact reverberates throughout our organization. These systems are interconnected. Outreach supports stewardship. Stewardship supports survival. Community engagement supports volunteer mobilization, long-term care, and ultimately the success of this city's own Canopy goals. And most importantly, these are not just cuts to services. These are cuts to people and organizational capacity. The city itself acknowledged an important principle in its own budget presentation when it emphasized efforts to largely avoid layoffs through vacancy management and reassignment strategies, even as it made difficult decisions about the budget. The city recognizes that preserving people and institutional capacity matters because once capacity is lost, it is difficult and expensive to rebuild. We should be treated the same way. And when combined with other proposed reductions impacting the city's own urban forestry operations, I respectfully ask that these cuts be viewed holistically, especially at a moment when Palo Alto is working to grow housing in South Palo Alto and across the city. Disinvestments in urban forestry is ultimately a disinvestment in the long-term livability, resilience, and health of our neighborhoods. Our sincere hope is that these reductions can be fully restored. But if that's not possible, I respectfully ask that you advocate for the least severe option available to you. Again, I want to thank you for your leadership, for your service, and for your partnership in taking this matter so seriously. Thank you.
That concludes public comment on this item.
Okay, thank you. I just had one formatting question first. On the, what's this called? Budget adjustments, technical adjustments, you got A2P is the second step after FC. And are we going to go through that as well, or?
Nope. No, so the A2P is amendment to propose. So that's our little acronym, but you don't need to go through these. We're just trying to be transparent about the technical adjustments.
Okay.
And so I think this afternoon, it might help to say for the record that there's concurrence, and that'd be good because we will bring these technical adjustments back to council for formal adoption on June 15th.
Okay. Let's go back and try to take these sort of in order, starting with the 800,000 incremental, which is page 6, and then going through the true up to get the balance, which I guess is the 7 really. Yeah, thanks.
Clerk, can you pull up slide 7?
7, yeah. Yeah, let's just review that to make sure that we're in sync with that and with the methods that you've used.
Sure. Shall I walk through it again, or
No,
do you want to start
let's
with?
just see if we have some questions from colleagues or.
The main question I had was the implications for the CIP. Can you clarify what, if anything, has changed about projects that would be delayed or otherwise less funded?
Since our May 6th workshop, is that the question?
Yes.
Super. So if we look at this slide, the good news is we have avoided that. We will not need to defer any projects from the proposed CIP plan as published.
Okay. No additional projects with the couple of baseline cuts or delays for like a bike route and a couple other things as discussed last time. Those will continue.
I'm sorry, please repeat so that way I make sure we're.
So on the CIP front, the baseline that I started with before this packet was that we were going to delay a few projects. And now we are not only going to delay a few projects, we're going to cut $500,000 in terms of transfer. But we're saying that despite this smaller transfer, we won't need to make any more cuts than the projects we've already delayed slightly.
Oh, got it. So I think the signs are a little backwards. So in this case here, we're actually going to have a net increase to TOT of 140,000. So the 540,000 should be a plus.
Oh.
So you're going to see a net gain in CIP.
Oh, okay.
From the technical adjustments.
I see. Okay. So you have the TOT revenue.
And then 100% of it goes to CIP.
Right. And then the general fund based transfer reduction is offset by that. Okay.
Mm-hmm.
Okay. Okay. That is helpful. That's my only question for this slide.
Pat?
So one thing is the various prospective uses of Measure K. And we had a discussion about trying to understand what are the revenues since it became active. We've had now how many, was it 2.5 years of revenue? Yeah, I think it was a fractional year, the first year, yeah. And then through the end of this year. And what has been expended to date? And in this case, I think we're talking primarily about the transportation bucket. And then what is allocated through this budget. And we were kind of all over the map at the last meeting with different understandings, and I still don't have any clarity on that.
You're talking about the Measure K by the 3 buckets?
Well, and I think what we're really mostly talking about here is Oh, no, actually it's both buckets. You're right. The OSV is on the housing bucket and the quiet zone is on the transportation bucket. So do we have what has been collected, what will be projected to be collected through these fiscal years, and what has already been expended and what is being allocated?
All right, Councilmember Burt, as part of the meeting that we had on May 11th to the council, we have a link in there that brings us back to one of our pages on the web where it actually provides a comprehensive review of all of those, separate out between public safety, administration, as well as transportation and affordable housing. To the extent that you want to see actuals of where actually it all went per year, we might need to come back with you with a better summary of that.
Okay, so on the first one of the quiet zone, because the narrative in the staff report addresses this. Let me pull that up.
You know, what might help is if we take a moment and go to the budget book and the transmittal, and also the budget general fund overview. There's an extensive Measure K discussion. So let's take a moment to get there, and it might inform this conversation.
Okay.
So let's take a moment.
Yeah, and what I'm going to be wanting to understand better is this using a portion of Measure K, it says that it would reduce our local contribution toward the grade separation designs. Can you blow that up?
Yeah, there we go.
Okay.
Let's start the conversation from there. Is that okay?
Yeah, good.
Oh. Okay. So we've been expending toward the grade separations. And so that's why the balance is only what it is. But we're saying that for the FY27, even, let's see, does this include the quiet zone expenditure? Yeah. Okay. So that was going to be how much? $1 million? Is that in FY27?
So for fiscal year 27, this table does represent a $400,000 for Measure K, because that was the initial amount
Yeah,
that we
and what
had
do we have
allocated
now?
for it. We're adding another million, so it'll be
An additional $1 million.
correct, and that
Okay.
1.4 will cover the full design for the quiet zone. It's expected
Okay.
to.
And so then we'd still have an ending balance of 4.3. So,
Less one.
okay, less 3.3, excuse me. So why would that impede our contribution for the final design on the grade seps if we have that much in the balance?
So for the grade separations, there's still a significant portion of funding that was going to be identified or to be identified through some other source. And so what's happening is in the outer years as we're transferring funding for 28 to fund the entire construction. of the quiet zone, we'll be leveraging some of the allocated funds that were going toward grade separation.
Yeah, but we've got a 3.3 million balance there. And the staff report says that the change by using the additional million for quiet zones would reduce the city's local contribution for the final design. But why isn't that 3.3 million enough for that local contribution?
Just to clarify, the 3.3 would be the remaining balance we'd have here for the Measure K.
Right.
Regarding
Through
transportation.
2027.
Through 2027. In terms of the reference of the terminology in the staff report, the city's contribution would be 100% now through Measure K. So I think to answer your question, we're going to have 100% of it funded for the design through Measure K. So there's no like other general funding coming.
But it says it would reduce our contribution. Does it really mean that we would just have to draw more from?
No, we're basically we're taking the funding that we had identified in 28 and basically expediting it. So when I say we reduce it, we're just not going to need it in the future years. So we. Correct.
Pat's asking about the grade separations.
Yeah, so on page 6, the first paragraph under quiet zone says, okay, we're going to take an additional million from Measure K transportation for that, which is what reduces the ending balance down to 3.3. The second paragraph says the change in use of Measure K above reduce the city local contribution for the final design in FY28 to the grade separations. And the way I read that, it says that there aren't enough dollars to do both. And it says it reduces it. But is it instead that it would reduce the balance available in Measure K, or does it actually reduce the contribution?
I will attempt to answer your question using transportation talk. So there's planned, programmed, and allocated funds. The amount of Measure K available for transportation is absolute, which includes the amount you're seeing as the fiscal 27 balance. So that's what we have. We have future plans to allocate those dollars to the grade SEP. So that's in that amount. You still have an absolute amount of money. So we only had enough to deal with the cash flow of both projects at a particular time. And we allocated that in different years. So all we're saying is by taking the cash balance today, advancing it for quiet zones, there's going to be less future cash balance available for the grade SEP. So it's really a timing issue when we're using the balance, when we're putting it into a budgeted project or taking it out. So the money that we were building up for grade SEP is now going to be reduced by 1 million. The cash we have available today, that additional million, is going to go to advance the quiet zones.
So part of what I'm wanting to understand is the amount that would be our local share. Are we short? Or are we just going to have less balance? Because FY28 will have an additional contribution from Measure K.
Right. So I think the question is really, what's the impact to project delivery of grade separations? And Ria, is that a question you can answer?
So I think that our plan is to see how things go in the coming year and then to reassess what our sources are at that stage. So
That doesn't really answer anything.
It is potentially moving it out by a year for the grade separation in order to make it work for the quiet zones.
Why? I mean,
Because
what is the amount that we're projecting we will need in FY27 and 28 for the grade separations for the local share? That's not, I keep hearing this kind of generalization, and I'm trying to understand what are the numbers.
That what we were expecting was 1 million in 28. And so that's
okay. So why, if we've got 3.3 million in the balance at the end of 27, even including the additional million going in the quiet zones, and then another 2 million plus going in 28, why are we short? I'm still not understanding that.
Well, I think if I could rephrase, Ria, you're saying it's not certain that we're short. It depends on how quickly we need to draw down funds
For the
for the
grade
grade
separation.
separation.
Correct.
And what is the local share proportion and what are we?
Right,
That's-
relative,
I need
it
to-
largely may be dependent on the Caltrain expenses for the design work that they're doing and how quickly they exhaust those
But
funds.
it's 10%, right?
Is
that
it
right?
10%? 10% Measure K
I mean, 10% local share? Is that correct? Out of those
against the
expenditures?
Measure B funds from VTA and the grants that we have for.
We have a
separation.
couple of different grants, so I can check what
So I
the
think, yeah,
local share
bottom
is.
line, there's a mix, and the question of whether the $1 million from Measure K is actually a constraint on our ability to deliver the grade separations. It sounds like that's an analysis we haven't reached a conclusion on at this point.
Okay, so maybe is it correct then in that paragraph to say the change in use of Measure K may reduce the city local contribution as opposed to
Right.
that it does?
That sounds correct, unless Ria, you believe it's certain that it will have an impact.
And if you're certain, you must have the numbers.
So it reduces what we had projected, but that may not be 100% accurate.
Okay.
Let me check if Ripon has better words.
Okay, and then one other thing on the quiet zone funding is whether that is actually eligible for Measure B CalMod funding. CalMod is actually what I got Caltrain and VTA to agree to pay for was it 4 or 5 million for the safety improvements that we are currently just completed at our 4 locations, the rail sentry and the anti-intrusion mats, that was for safety measures. And the question is whether the way we're now addressing quiet zones, and particularly the urgency at Churchill, we've come to recognize that that's a safety measure. And so that may be eligible for VTA CalMod dollars. It basically requires both Caltrain and VTA to agree. But they've been collaborative on these things. So that we don't have an answer to that right now, but I wanted to put that on the table. And then on the Chambalas, you have it down for FY28, and the narrative had talked about a combination of planning and seeking grants. So one question is why FY28 rather than FY27 to even begin this process?
We think that this project could score well in some of the grant programs available for transportation planning. And so we would like to seek those grant funds, and we didn't have another source for this coming year.
And presumably we can apply for those grants
Yes.
really without a CIP allocation.
Yes.
That'll be done through operating funds from staff.
Yeah.
Okay. I think it'd be helpful if we're saying that we're proceeding on the project this year and the first step is to pursue the grants, then I think that would be helpful to get that down on paper.
Right. I think as a operating matter, that would be part of the staff work plan as opposed to a CIP project. So we wouldn't typically list a CIP project until we're spending funds on the planning itself. So I think we'll want to find the appropriate place to document that.
I think that's fine if that's the sequencing, just to be clear that we're going forward. And just one of the grants that I didn't see noted is actually Valley Water, and initially, and their grant level may not be at the same level. And then this might be eligible for grants other than the Caltrans Sustainable Transportation grants too, including Measure B and MTC grants. Okay. let me see, going through that list. The TOT, we're saying all of that increased revenue is going to the CIP. That's not by formula, right? It's so a portion by formula and a portion discretionary. So that basically that's pretty close to washing against the what we were previously saying to find funding to address additional general fund expenditures that we've gone through here. We had discussed pulling, slowing down certain CIP projects. And instead you're saying because of the increase in TOT, we no longer have to do that. And those two things pretty much wash out. Is that correct?
All right, I'm going to try to respond because that sounded like a riddle. So I'm going to try to unpack it. So, and
Not intended to be a
Caitlin,
riddle,
I know.
I'm intending to simplify. Yeah.
problem. It was
Yeah.
a long word problem.
Yeah.
That makes it sound so much more legitimate. And Kayla is also on the call. If I misspeak, please chime in. When we took a closer look at the revenue, now keep in mind on that slide, we have two lines, right? We have the TOT allocation and then also the reduction of CIP to balance. When we looked at TOT in the last couple of weeks, we decided that we had room to increase the TOT, but we also looked at the complement of revenues by operator. And so we took a deeper dive, not only at the top line numbers, but also looking at the different operators and revenue trends. And so when we looked at it from that level, we had to look at the mix of the underlying assumptions. And that's why, even though this technical adjustment looks weird, we had to rebalance it, to your point. So 100% of it went there.
I'm sorry, by operator, are you referring to the commitment that we have that the new hotels would be all toward the CIP? That's what you're referring. I just want to make sure.
Yes. And so we looked at that mix and then we trued up not only the aggregate revenue, but then also the mix of what should go to CIP based on that past practice. I lost my train of thought there. And then, for CIP as a whole, now you may recall in September of 26, we reduced CIP by $1 million. We carried that into 28. So that base reduction was already reduced by $1 million. In the 27 proposed, we reduced it by another $1.5 million. So the aggregate reduction of our CIP base is actually $2.5 million in 27's budget. This 542, I guess you could argue, offsets.
Yeah, I'm comparing to when we had our last finance committee meeting.
On May 6th.
Yeah, and we said, okay, we want to tentatively propose these increases in general fund expenditures. And that was going to be, I think, tentatively funded by a reduction in CIP. And what I'm trying to just get at is the simple bottom line, which is the increase in TOT has pretty much offset what we were proposing.
Yes.
Would be an additional reduction in the CIP.
That's correct.
Okay, that's all I was trying to say. All right. I think I have other questions, but less focus on this one.
I appreciate that summary very much, Pat. So thank you.
Yeah, so I just want to comment on the top part. I'm still comfortable with that as recommendation, and that specifically we understand the risk in the school crossing guards and track watch by booking 50%, but I think that's quite reasonable given the cooperative relationship we want to have with the school board. And the OSV numbers, as we talked about last time, are sufficient relative to what we're doing now. And there's no new even recommendations yet to council on anything else. So those numbers I think are solid. I'm delighted that you found revenue to help with this. I always like to hear about the revenue more than the expenses. It's my whole business background. I like the revenue better. So I think, as you put that here in this whole slide in the second half below the gray line, I think is quite good. I was expecting some bigger number in technical adjustments one way or the other. So we're all pleased that it's only 16K that we have to talk about. You did dip a little bit into some of these other areas of parking lot and so on, but let's first see if George has any questions on this slide.
I'm okay for now.
Okay. So I think we could go on to the parking lot items to date. We've touched on a couple of those already. And what we touched on already was quiet zones, right away. But the next one up is this OOT staffing. So this would obviously be an ad, and it's a 50. It's a half-time ad from a full. Adding a half a person and it costs 190K. So did you want to elaborate on the text here in the staff report?
So we have actually rollover from, my understanding is that we have some rollover money from the original conversation to do with OSVs. And so we can apply some of that to this as well. So I think this amount will be lower.
Oh, you mean it's in the 384? The number we have in the budget now, new for 27, is 384, including Ging Road and additional towing capacity as it's listed here.
So I'll go step by step through this one. So the current halftime position is a temporary unbudgeted position. So if you were to accept this recommendation, we would add 1 FTE to the table of org, which is a plus up of the current temporary half position. Plus, we would have to account for the budget, the cost and revenue, which is about $190,000 a year. To pay for it in fiscal year, so that's the cost side, the total cost, that's the 190. To pay for it, what Ria is referring to is there was an original $150,000 as part of the initial implementation of the oversized vehicle program to support engineering, striping, and signage. That was applied to this temporary position. So Ria is proposing to put that $150,000, at least for 1 year, because it was a one-time funding. It's not ongoing. Apply it to this position. That leaves about a $40,000 difference. That would be supported by Measure B and other associated work that this position would take on.
Is the 150 in the 27 budget now?
So this is the carryover money that Ria is referring to. So that money was already appropriated from the BSR for one-time use.
But in 26.
In it could have been even before 26, before I got here, but it was $150,000 one time from the BSR.
I still think I'm hearing you say that it's like 350 or 400 that's going to hit the 27 budget then.
It will. So it's 190,000 a cost. If we use this one-time money from the BSR, that's 190 in cost minus one-time 150,000, which leaves a $40,000 balance, which in fiscal year 27 would be Measure B. The year after that, because we're just using one-time funds to cover the salary, would need to be covered from Measure K, Measure B, other transportation sources in future years.
However, I don't think that Measure B will be able to be used for OSVs. So that would be for a different portion of their work that's related to congestion relief.
You might want to clarify that in the staff report, because that raised a flag for me when it indicated Measure B was being used for the OSVs.
And again, to the text, continue to provide essential technical engineering support and field verification, for the design and installation of signage and striping required to implement OSV program. So is this in anticipation of a new program or?
No, this is part of what we're currently working on. At the moment, we have an hourly staff person working on this part-time when they can, using salary savings.
asking it another way, if we didn't do this, what wouldn't get done? You couldn't do the striping, or you'd stay with the hourly person?
We are able to afford the hourly person in the current fiscal year because we have salary savings. My understanding is that that kind of goes away at the end of the fiscal year. So yeah.
Well, if you did not move this item from the parking lot, OOT would still have a temporary $150,000 half-time engineer. When the $150,000 is exhausted, the position will go away. So this particular request was level of effort and how much work can OOT get out the door. So what's the marginal benefit? The proposal is if you take a half-time, one-time engineer that's currently only doing OSV, you make them a full-time ongoing position. They will complete the OSV work as part of their assignment of work and be able to take on other bike, ped, engineering type projects within OOT.
I would add one more thing. So as we were going through the process to try and bring on a part-time hourly assistant engineer, we hit an obstacle in terms of HR and how that relates to unionized positions. So our advice had been, the advice we received was that we needed to bump it up to a full-time position.
Union?
Yes. SEIU.
Sure, go ahead.
Related to that, is it that the going from a half-time to a full-time position causes 190,000 increase, including salary and benefits?
That is the full cost of the position because this is a temporary off-budgeted position. It is not in the proposed budget, both salary and benefit costs. So the proposed budget would go up by $190,000 to account for this position if you accepted it.
But we have an existing half-time FTE, assistant engineer.
Correct.
So I was assuming that the budget impact would be the difference between what we currently have budgeted and that. And so
it is in fiscal year 27. So you're correct about that. But if you recall in the table of org and the org charts you see, we always show a box of the temporary part-time positions as a total. This would change this position from just one of those in there that, again, once funding's exhausted, it's gone. It's not an ongoing position to become one of those 1.0 full-time positions that would end up in the org chart. So for that, we would add cost. So that's just the cost expenditure side. The revenue side, you are correct. For fiscal year 27, the difference would be about $40,000.
Oh,
but it would be a FTE. So if we didn't
would be
want
an
it for
FTE.
27, we'd have to do a layoff.
I don't.
that's it.
Yeah, I don't.
I mean, depending on what workload there was, because I'm still having a hard time figuring out like a 3-year plan and how important it is to have this person for 3 years to do X, Y, and Z. That's my problem.
Oh, so the other things that they would be working on are some of the traffic calming deliverables and also traffic control devices and red curb. So that's all. It's all the signage and striping type work.
Yeah, I mean, we did have some signage that had to be done for the OSVs. It's probably a good possibility that we're going to have more signing to do. So I don't disagree with that at all. I was just trying to get a feel of, what's the overall JD look like for this job. Yeah, go ahead, Pat.
Well, I'll just add, at least anecdotally, since it's come up in both committee discussion and council, you see a reference in here to daylighting. And so daylighting 200 intersections more than would otherwise be done. Again, this is over the year. So that's an example of the kinds of really bread and butter work that Ria's team does and the increase in production that you can expect with this incremental add.
Very helpful.
So just this, going back to this question of when I read this paragraph, it indicates that we've got a net increase of 190,000. So if there's a better way to make it clear on what's the budgetary impact for FY27, that'd be helpful.
I think we should determine that now if we can, or soon so we could wrap up this session if the committee desires to make it a recommendation. So maybe.
Right,
Jonathan
we've heard
would-
40,
Yeah, Jonathan.
somewhere between 40 and 190. Are
Yeah.
you, do we know?
Well, the reason I keep saying it's 190 is because the 150,000 for this position was appropriated in 26 and is being carried forward, 1.5 fiscal years ago. So at least from my perspective on the general fund, if you add this position as a permanent ongoing position, the salary and benefits will go up by 190,000. We're just paying for it through carry forward
Carryover.
dollars.
It's been
Yeah.
carryover dollars from the current fiscal
Correct.
year into the
Correct.
next. So the net impact on the proposed is the full position.
But the net cash is $40,000 because we'll carry forward that money from the prior years to pay for the first year.
So the general fund impact is $40,000,
Should be about in fiscal year 27, correct?
but we're
Through a
anticipating,
combination.
it'll go up to 200 and something next year.
In future years, it will increase, yes.
I think the other question is to what extent we're confident Measure B can fund it in 27 and in future years, because that would be relevant to Finance Committee's questions. Do we know that, or should we come back to it so staff can research, because it would matter in the budget balancing?
We'll need to get approval from VTA for that. And so we'll need to give them a
Yeah,
description of those tasks that are related.
I'm kind of surprised that Measure B would fund kind of ongoing staff positions as opposed to projects. But remains to be seen.
All right, I have a couple of questions about this position
Yep.
as well.
Go ahead.
So overall, appreciate the work on OSVs and the work on daylighting. The OSV work, I think I picked up there was an illusion or mentioned that this work is actually limited scope work for the transportation department, that this is not ongoing work, that they've been working on it part-time this year and work on it part-time next year, but they can move on to the sort of more quality of life work like daylighting and will be fully off of OSV work as of FY 2028, for example, unless we add a bunch of new scope. Okay, that's
That's my
important.
expectation.
Well, I guess we need to give a little more nuanced answer to that. I think we expect OSV work will continue, but hopefully at a lower level of intensity.
Right. I mean, if we know where we put the signs and where we painted the curbs and we don't need a lot of changes, then that work could theoretically fall to zero for the transportation department. Not necessarily police or public works or other enforcement on that, but it would get pretty low.
Well, to a certain extent, and the nuance is simply that the focus is where there are currently parts of town that are currently experiencing issues, and that is something of a fluid or a dynamic situation that is expected to continue into the foreseeable future. The only alternative would be that high number, I won't quote the number, you had multiple millions of dollars in order to blanket the city with signs.
Right.
And since that's not the approach we're using, this incremental expenditure is a more manageable alternative.
Okay. I also just had a question about like how we're managing our staffing here. Are we just going to convert the current part-time assistant engineer directly into this full-time role? I ask because I want to confirm that we are having a good sort of hiring bar and like open process for applications. The person that we hired to part-time hourly to put some signs up may or may not be the right person long-term to engage with the community on daylighting and traffic calming and all of those steps. So I want to make sure that we...
Yeah, it would be an open recruitment
Okay.
that would be posted on the usual place where we post jobs.
Okay,
So yeah.
good. All right, I'm happy with that point then. Thanks.
So to close on this, we need to get funding sources sorted out before we can do so.
And if we don't this afternoon, then it may not make it into committee's recommendation, in which case, I guess, if we have time and we want to bring it back on June 15th, otherwise it would need to be something we bring back at mid-year. Just depends on some of the urgency. We are reacting to committees' comments regarding wanting some OOT projects to be accelerated.
Right.
So you guide us on the next step. You know
Well,
the
I guess
connector
one
word.
other option is depending on if anything else comes up, if there's 3 or 4 issues, we could do a 1-hour finance committee meeting 2 weeks from now or something.
It also seems like we also need to get some clarification from for Measure B, and we may not be, that's not so much in our own control. So
So I do have clarity from a staff member that the VTA is allowing the use of Measure B for projects that are reducing traffic congestion. So we need to just make sure that the position is allocating that specific portion of their time to those projects. Yeah, congestion relief.
I'm not sure that that is in fact what the focus of that position is congestion. Is it not as it was laid out in the staff report?
Okay, so I think we're as far as we can go on that one. The next one is relative to these, it came up in terms of lateral hiring bonuses, and there's some discussion here about wanting to have some flexibility on recruiting. I don't know if, Ed, did you want to clarify that anymore? I think the impetus here is that if there are small numbers like 5,000 or 10,000 that can get us a sergeant from Redwood City, you know, we got to do that next week. So
Yes, and let me be perhaps transparent on this. Lauren has been managing the conversations between the police chief, HR director, and I believe the conclusion is that we believe we do not need an additional appropriation at this point, largely because salary savings is the source used to do these types of incentives. And so I think the only immediate step is for staff to determine if there's any additional policy flexibility that's needed in order to exercise the strategies already in mind.
Okay.
And so they're working through that. But
then there's also going to be a meet and confer just to
for implementation, if there are any additional tools that are not currently available.
But I would assume that that would be pretty easy because we're talking about spending a little bit of money to get our staff positions full.
I would hope so. Yes. Yeah. Just can never count on it.
Yeah. Okay.
So if I
Yes.
Go
Go
ahead.
ahead, Chief.
If I may, I think our goal with the Finance Committee and with Council on this item, as the city manager pointed out, is not necessarily to get additional funding allocated, but rather to have some authorization at this point to utilize existing salary savings with some flexibility to come up with some creative options for incentivizing laterals. And to the council member's point, we're talking about modest amounts as far as these lateral incentives. For example, as you say, $5,000. But I think what we're looking for here is there are some ideas that have come up that we've not necessarily done before. For example, while we allow laterals to accrue vacation commensurate with the experience they're bringing with them from another organization, we don't necessarily seed their vacation pot when they come on. So they come on with 0 hours versus there are a number of other agencies that as part of a lateral hiring incentive will pre-seed some vacation hours in that lateral's vacation bank. So we're basically just trying to give ourselves the ability to be nimble and have some variety of different incentives that we can use to best fit the needs of the individual candidates. So whether that's relocation expenses, vacation hours, et cetera. And ultimately, we're just looking for the committee, hopefully the committee's recommendation that we have the authorization to use salary savings for those purposes.
I think if we can build that into our recommendations, that's a terrific way to go.
Well, I think the sequence of steps going forward, and perhaps our HR director can correct, is consultation with bargaining. Well, first being clear with the department on here are the tools we want to put into place, consultation with the bargaining units, and then council approval. And we could do that last step ideally through a consent item, but if necessary, we would arrange a closed session.
I think that'd be fine on consent. That's
Correct.
my opinion.
Okay.
That's
HR
exactly
director
right.
agrees.
So then maybe part of the motion, Chair, would be to incorporate something to that effect. So then we could carry this to council.
Yes, it's really authorizing staff to bring forward specific recommendations for incentives.
Okay, now I'm seeing what I think the next thing that came up on the slide is the nonprofits. And where we left it last time was any finance committee, any additional funding would be authorized by council and processed through his rep. But on the baseline, the sort of longer term partners, we passed along kind of as is. And then we have this sort of outlier now with the Canopy situation. So we have to do some housekeeping on that one way or the other. So how do we approach that?
Yes, I think maybe I'll pick up on this. Appreciate that quick intro, Chair. I think it might be helpful to have our Public Works Director review the particulars of our agreement, or perhaps just an overview on our agreement with Canopy to describe how the services are described within the agreement and the anticipated approach to discussions on how the budget reduction would be implemented.
Good.
Good afternoon, Chair and Committee. Brad Eggleston, Director of Public Works. So without going too deep into this and reading from pages that are in the staff report from when council approved Canopy's most recent contract, which was last December, and information that's in that contract. So there are some principal goals is the way the scope is laid out. There's a goal A on community education and outreach. It includes things like the mayor's annual tree planting, the Arbor Day events that Canopy helps us organize, community tree walks, website and communication, and a number of other services related to community education and outreach. So that's one principal area. There's an area of tree planting, which includes planting trees, including volunteers, replacing trees where needed, and community planting events, as well as planning that relates to canopy disparity between North and South Palo Alto. There are tasks in our Goal C that relate to tree assessment and tree care. So those include some specific items there, a young tree care survey, a digital tree health survey, and then a kind of catch-all category with some fairly significant budget that is called other services related to tree assessment and tree care. And then the last of these sections, Goal D, is urban forestry program assistance. That includes as discrete items maintaining and managing an open data portal and administering the city's Right Tree, Right Place program, which that piece of it is more related to the utilities department. So I guess the point of that is that in each of these goal areas and kind of breakdown areas, many of them have goals in terms of the number of different types of events to do. All of them have broken down budget items line by line. So and we talked about this, I think, at the city council check-in on the budget last week, that the urban forester and public works had initially called out some specific areas that we were thinking could be the places that we make those reductions. And what we're thinking would be the best approach now, if finance committee recommends and council decides to proceed with these reductions, that we would essentially sit down with JP from Canopy staff, and work through what are the areas where we think we can make some reductions in what we're doing, with the least negative impacts to the programs.
What are the implications for these reductions? We heard last time there's less tree cutting. Tree trimming. I don't really know what that means. If it means they're going to get a little shaggier, but
well, and let me just summarize off the top of my head what I think is in your memo. Public Works, we had a reduction target to meet for the budget. We proposed reductions in a number of areas, and there are several of them that are in urban forestry. The canopy contract piece of it is only one piece. So we're proposing to eliminate an administrative associate position that was dedicated to supporting urban forestry. We're eliminating an in-house tree trimmer position that is part of the team of tree trimmers that do work throughout the city. We are proposing to reduce the West Coast arborist contract for tree trimming by $50,000. So that's our contract that does the tree trimming throughout the city for street trees. And we're proposing the reductions here with canopy. So they're really part of an overall package.
no, I get the process. I didn't ask the question correctly. I want to know what residents are going to see as the differences based on these cuts.
And I've got urban forester Peter Gollinger online, so I'm going to let him take a crack at that question. Peter, are you there and available to speak?
I am here. Unfortunately, I'm still mobile, so I won't be on video. In terms of overall impact, I think the West Coast contract would result in 200 to 400 fewer trees being pruned annually. I think that the impact to canopy, depending on how it is distributed among the work types, is going to reduce the overall scope of that contract. So we'd have either slightly less events or slightly less support for urban forest master plan programs. Again, it would be determined based on where we actually put the cuts. The cuts to staffing is going to impact our response times and work backlogs.
On this question, colleagues, if you want to ask other questions. Yeah, George.
I'm just curious about the tree trimming point. If there are 200 to 400 fewer trees being pruned, can you give a intuition or a rough percentage of how much fewer that is? I'm assuming that we are not going to cut in a way that actually damages the long-term health of our canopy. Instead, we're making cuts where maybe there are minor aesthetic benefits or things like that rather than safety and long-term health. But I want to confirm that.
So our target for our current tree population is our 7-year pruning cycle. So ideally, we return to each tree at a maximum of 7-year intervals. To meet that, we need to prune a little over 5,000 trees per year. In recent years, we've trimmed about 4,500 trees per year, so we're a little bit behind on the schedule. I believe our current is an 8.3-year cycle. We won't really know overall impacts until we get bids to come in for our new tree trimming contract, which is set to go out for bid here in the next probably 2 months. So until we get those bids back, we won't really know what it looks like long term.
Okay. And yes.
Can I add a little bit to that? Just to say that both the reduction to the tree trimming contract and the reduction of the tree trimmer position impact this. And so what I think I had mentioned during the initial hearings, we're going to be keeping an even closer eye on our annual production and kind of the average over time of that cycle, and trying to make sure that we're not seeing that slip in a way that would be problematic.
And that tree trimmer position is vacant, just to clarify.
That's correct.
Okay. I mean, on balance, I think it is reasonable to go from maybe an 8.3 year cycle to a 8.5 year cycle if we trim a couple hundred less trees per year. You know, I assume we know our trees and we're not going to have damaged utility poles or, you know, a bunch of trees that suddenly die because they weren't pruned somehow correctly in 10 years or something like that. On the canopy side, could I ask through the chair what specific impacts there might actually be to the canopy programs for a $40,000 cut?
Yeah, that's fine. Would you like to? Yes.
Yeah. You're just getting a sense of, are you going to lay someone off? Are you going to have X less planting events? You know, just give.
Well, the footnote is they're going to
sense.
still have a discussion about this,
Yeah,
this to,
yeah.
you know, what's really going to go on. But but maybe some of the just the specifics and your concerns for your organization.
You're right, Councilmember Lowing, that what we're talking about here, as Director Eggleston spoke about, is the number, right? The percentage that you're cutting from the contract. As the director said, we would then talk about where it would be least damaging to canopy. But at the end of the day, every service that we provide in partnership with the city requires human power. The digital healthcare survey that is on the table is powered by a human being. So to be honest with you, our foresters make between 60 and 70,000 starting salary. So cutting 45,000 is a human being. I'm not sitting here telling you that we're going to cut a position. We're going to have to find another way. We, as the city, also has, as a measure of last resort, laying off people, which the budget doesn't proudly declares is not a major damage to the budget, is to lay off people. We're going to try to do the same thing. We share the values of not laying off staff. But what I'm saying is that the more you cut, the more we're going to have to spend our energy trying to fill in that gap and fill in that energy that would be better suited to serve the city.
Okay, thank you. Did you have other?
Is there any sort of speculation possible in terms of what that means for the community? Like X fewer outreach events, X fewer trees planted, things like that?
So one of the most measurable items that has been verbally proposed is the cut to the digital tree health survey. The digital tree health survey is not an extra program layered on top of tree planting. It is the mechanism that ensures planted trees survive long enough to deliver environmental, public health, climate, and infrastructure benefits. So in the fully published most recent survey, it shows that approximately 84 to 85% of the trees surveyed are alive and thriving. That is an incredible number. We would never know that if it wasn't for the survey. We would never know which trees to prioritize, where to prioritize them, how to care for them if it wasn't for that survey. And we would be engaging communities who are accepting those trees in their own private property if it wasn't for that survey. So that is the most quantitative example that I have. Again, as proposed verbally as one of the cuts, but as the director spoke about, it sounds to me like the specifics of the contract cuts are negotiable. And what we're talking about here is a percentage at this point.
Pat Juni, comments, sir?
Yeah. So that last discussion on the digital tree health survey, is that what it is? Yeah. In part addresses a question I had, which is, you know, we've got a schedule that's saying we're going to try to go through this percentage of trees every X number of years. But that's not really a focused approach. And that may be the best that we've historically been able to do because we didn't have technologies to be able to tell us basically what trees should we be trimming and when? As opposed to, well, this tree hasn't been trimmed in 7 years, we trim it. And so I don't know where we are on emerging technology that would help inform that, but the digital tree health survey, at least on the aspect of tree care, does apparently allow us to have a more focused approach. But my understanding is that doesn't apply to the tree trimming. It's just the care. Is that right?
I'm going to ask Peter to speak to that, but before he does, I just want to add one other point, which is that in Palo Alto 311, tree care requests are, I think, the number one category of requests. And that is a way that we're getting requests and going out to many trees every year.
Makes sense.
Yeah, and I mean, I would just add that part of the program is probably more critical from a liability aspect than whether you're talking about 8.3 years or 8.5 years for the, the maintenance period. It's identifying, problem trees and responding in a timely way. And so that's the critical thing to focus on from a liability perspective.
And before you go there with Peter, I just want to follow up. That's a great concept, which is that 311 reporting isn't just an expense. It reduces our liabilities in a lot of places. So I just want to kind of highlight that.
Peter, thank you.
Yeah. So there's two separate surveys that Canopy performs for the city. The Young Tree Care Survey focuses on city trees that were planted in the previous 3 to 5 years. It depends on the budget and the number of trees available. And that is a comprehensive survey of how those new trees are doing. The Digital Tree Health Survey is primarily focused on private trees that citizens have planted in their yards. So it is very valuable information, and it definitely informs efforts to, like JP said, it confirms that the efforts are working based on the survival rates that have been reported, but it doesn't directly report back on maintenance of city trees.
Thank you. And I'll just say one other thing is when we had this a kind of very cursory discussion of this back a couple weeks ago, and the staff reported said, well, these are the functions that would be cut or reduced as a result of the canopy cuts. I had assumed that was based upon a discussion with Canopy in advance. And what I'm understanding now is that if we go forward, then those discussions would occur. I think going forward in the budget process, it's important for us to understand, especially when we're dealing with community partners, have we had discussions with them or not? Or are we acting unilaterally? And there may be times where we can't do those discussions in advance, but I think it needs to be really transparent to us where that happens and where it doesn't. I would say that based on the clarification on the digital tree health survey, that sounds like a value that I wouldn't want to cut. Remember that when a couple of weeks ago, we thought we were going to be taking about $500,000 out of CIP projects, and now we've actually been able to offset that with additional TOT revenue, which I'm glad to hear. I'd been hearing anecdotally similar things from hotels that they're doing pretty well, and so we have some latitude that we could recommend to the council on restoration, because the $500,000 we thought we were going to take out of CIP, we don't have to take out right now. So I just want to put that on the table, and I would support giving some direction on what level of reduction in the Canopy budget we would like staff to discuss with Canopy and work out the details on.
And thank you. If I could just comment, Councilmember Burt, your point's well taken in terms of consultation, and appreciate the way that you phrased that. I did want to just perhaps elaborate a bit and use the survey as an example. I think it's similar. And again, this is not my area of expertise. So my point is really that the more detailed discussions, especially as it relates to multifaceted services, as we're discussing here, really is where the details get worked out. In the case of something like this survey, I think it is some ways similar to the frequency of maintenance we were just talking about. It's really not we're doing it or we're not doing it. It's a question of the level of extensiveness that occurs over the course of a year. And I'm just looking at that attachment that Director Eggleston pointed out. And in each of the next 3 years, the digital tree survey is budgeted at roughly $25,000. And the young tree care survey is each year has about $50,000 allocated to it. So a question that would want to work out with Canopy in this case is it necessary every year? Is there a way to modulate that expenditure to, let's say, hypothetically every other year? And again, what volume? Is it citywide in each year that the survey is completed? Again, that's the type of consultation that would be necessary in order to just ensure that the again the resulting services reflect the resources that are available.
Yeah, I was going to say something similar to what both of you just said, which is that I think we need to know the specifics of what are going to be reduced, and obviously so does Canopy, but this. I mean, I'm concerned about, South Palo Alto, and, we don't want to back off on rebuilding that canopy because by definition, it's a younger part of the town and it doesn't have as much canopy. There's no bias there. That's just a situation of history. But, we want to keep working on that. So, and I think the idea of negotiating the budget with Canopy after our budget is done is, not ideal. So we still have a month before we're actually approving the budget. So I hope we would be able to get a little bit more specific on that. And then there's also just the notice period in terms of how much time they would need to react to making the reductions. But I'd like to see more of the specifics stamped out. And overall, I'm comfortable with having a lower number than about 40,000 that's cut from that budget. It's not just that trees are sacred in this town; it's that they need maintenance. We know that, right? They need planting and trimming and so on. And I don't disagree with what city manager has said, that it's not like we're not going to do it. It's a question of the frequency. Do you anticipate that this level of service that you're sort of reducing to would be permanent, or are you just doing a very good job of responding to, cutting expenses in a tough year?
We would hope that it wouldn't be permanent. I mean, the way it was described in our task with providing proposed reductions was that it would be ongoing, which in this instance meant, I think, at least 3 years. But I know in talking with the urban forester about some of the areas that he had proposed, as you point out, without the consultation, they were some areas where he thought that if we temporarily suspended some activities, it could be less harmful overall than other areas, such as the plantings in South Palo Alto that you mentioned, Chair.
Yeah, this just feels like it's getting a little bit past the meat and getting towards the bones. If it's something that we actually want to do, but we're gritting our teeth, and I fully understand why that's the process, and I'm not at all critical of the process.
And I'm just going to say again that by no means with us proposing these cuts is this public works saying that we think this work is unimportant.
Yeah.
Or that there's budget that is extra or
Yeah.
fat on the bone or anything like that.
Yeah.
All of these cuts we're proposing are difficult.
Yeah, I think we're all on the same page. Yeah. Other comments on this?
On the canopy part?
Yeah. I agree with Pat. I think we have the budget for this. I think I take the city manager's point as well that some parts of Canopy's services, maybe we can do the survey every other year. Maybe we, I've gone to several tree planting events, and maybe there are some sort of efficiencies with just the fact that there seem to be like 20 people trying to plant one tree at a time at the events that I've gone to. And so that maybe there are some like operational tweaks. We can't dictate that, the specifics right here. But maybe we can direct staff that to continue discussing programs with Canopy, and that the cuts be no more than here I'll just pull a number like 15,000, corresponding to basically making one of the monitoring programs happen every other year or something like that. So if there are no cuts, if staff can sort of justify all the programs and find that the monitoring isn't duplicative of the city's own tree monitoring software and the city's own, like, don't we have some satellite like tree health
We do for
data?
measuring overall canopy coverage.
Right, but that doesn't tell us like where
The
trees
health
are
of
growing or the individuals. Okay, yeah. But like if there's any this is a part where it's hard because I can only speak in hypotheticals, but like if there are any redundancies or theoretical savings, maybe we can pursue up to, say, $15,000 of those. But if not, then we just keep the budget flat or something like that. I think that's obviously would not want to have any cuts, but there's something just in the fact that we are cutting positions and we're cutting other contracts to tree maintenance where it feels less ideal for staff if we are cutting a staff position but then not touching the equivalent canopy contract at all.
Okay, let's move on to some other items. I think we're on the additional clarification or consideration page. And the first one up is employee childcare. I think the issue there was more of the long-term forecast, I believe.
Just noting that committee coming out of the 2-day discussion wanted us to incorporate this in long-range financial forecasts and remove this idea that it's pilot. So I wanted to affirm that and also affirm that it's being programmed in the general benefit fund for 3 years. And after that 3rd year, it'll start hitting the funds more directly because we have fund balance in the general benefit fund. So wanted to confirm that again. And if there's still support, then I think we'll formalize that in the recommendation going to council for the June 15th.
Okay. Then next up is the Heritage Parks CIP.
Yes, so this is where committee wanted us to notate that to prioritize the park drainage improvements related to the rock building water intrusion. So we're happy to do that and wanted to see if there's any other further discussions in that regards.
So there is that CIP that's identified.
Correct. The CIP is a pre-existing project called Heritage Park.
Right.
There are it's about 75,000 that's held in that fund. And we're just notating that. And also I think the concern was that we'd had funding available and that there's some expediency to being able to use those funds when the need arises. And we're affirming, yes.
Plus, we don't have full bids, so we don't know what the right number is.
Correct.
No, but I think it's reasonable to assume that the 75,000 is not adequate. So I don't want to confuse those. It's good that we set that aside. But the question is, if we don't yet know the number, how do we make sure that there won't be a holdup if there's an urgency to resolve the issue before the next winter? What would be the best mechanism to have a placeholder of some sort for an uncertain number?
Right. And what I could add to the discussion is that staff has been having meetings with the Palo Alto Museum. We met a couple weeks ago. We met again yesterday. There's a waterproofing study, consultant study that they've had done with some recommendations. There are initial cost estimates that they've obtained coming out of that. We have another meeting next week to continue discussions with them on what the approach could be. If the city was to have a meaningful cost share in that work, 75,000 would not be enough. In some discussions this week, we've identified that a particular project, the Mitchell Park Library repairs project that's proceeding now, and that a construction contract was recently awarded. There's $250,000 of savings there. And if the committee was interested, we would suggest recommending appropriating that, actually not into the Mitchell Park Library repair, but into the existing Roth Building Rehabilitation Project. And that could be some additional funding that would be available if we have these discussions with the museum about the approach that could go honestly either towards museum or building repair work, or the work in the park area, recognizing that it's all related to the basement and the building.
That sounds good. I mean, that it gets us close to the ballpark of what it may end up at. Yeah, good.
I think having that buffer is great. I think continuing to negotiate is important. Continuing to get more bids is important. Not fully understanding the history of, whether drainage and waterproofing was part of the original plan and then cut in various ways that were obviously regrettable in retrospect. I don't want to, for lack of a better word, cast any blame or say how we should split the cost, but I think we should try to have a productive conversation on that.
Do we have any idea yet of the timeline once we put a shovel in the ground till it's fine? I mean, it's months, not years, but do we have any idea?
In the discussion we had with the museum representatives and Vance Brown, the contractor that they've been working with, I think there was discussion that the work could take place on the order of a month and a half. There was, even in that discussion, design work that was needed. There's the city processes, there's permitting, probably some other things. But the length of time, if all the work was to be done at the same time by the same contractor, was relatively expedient.
Okay, thank you.
That's good news, but we have that winter closure on construction window for some of these things, right? So it sounds like we do have enough time, but not a lot of extra between now and late October, whenever that window closes.
Right, and definitely part of the discussion has been to recognize that and identify ways that we as our teams could work together to make that move along as quickly as possible.
Okay, good. Do we need to talk further about the DTT?
Yes, I believe earlier committee member Burt had a couple questions when I clarified the initiative would preclude charter cities from re-upping the same tax. So
yeah, I ended up seeing that in the staff report after you pointed it out. And I don't recall this issue coming to the council on our legislative or advocacy program, and that we've had any discussion on it, given how significant it is potentially to the city. I was struck by the virtual pseudonym of Save Prop 13. I don't know what DTT has to do with Prop 13. And I'm surprised, actually, is it it's the AG that approves the ballot language? I can't remember, or the Secretary of State, but I'm surprised they're able to get a ballot proposition on under that kind of language. Nevertheless, where are we on us and others stepping forward on advocacy on this issue?
Yeah, Let's see, is my understanding, first off, that this is not a legislative issue because it's an initiative. And to your point, perhaps the city attorney could comment on how the title gets finalized. But this is increasing just in terms of engagement among the cities. But at this point, there's not a specific to do other than really try to mobilize, a campaign, such as the case may be.
Well, and we haven't even taken a position like we have on the regional transit tax.
Right.
So it hasn't come to the council at all. And this, we have a legislative advocacy, but we have broader advocacy that we do beyond legislation. I would want to see this come to the council as soon as possible.
The city can definitely take a position. There's limitations as to what the city can do, but from an electioneering perspective, as far as using public funds to support or oppose an initiative.
No, for instance, on the regional transit tax, we took a position, and that is a communication to our electorate why it's important to our city. And okay. Let's see.
Did you have more on that one?
Not on that one. Sorry.
Oh, yeah, the next one down is this 2026 admin assistant, and it's supposed to be a 6-month pilot originally, and we're going to start it when?
In June, I believe. And so we were going to run it through December, but the concern there is that council would need to reconvene on this subject to determine if the pilot would be, suspended because we learned that it was not as intended, or would like to extend it, in which case, the most likely time would be during mid-year. So if we extended the contract or the hire through March, that'll allow the council to deliberate on this with other budgetary considerations in February.
Or an alternative would be to keep it at December, because that's where it's timed out to be, and then address it via the council contingency fund, which is what we did originally, right?
Correct. I think then,
Because that's already budgeted.
Well, I think procedurally, I'm trying to work on the fly here, to make a draw of, let's say, 15,000 from the council contingency would require a colleague's memo or something it's essentially like that, and concurrence from council members for that expenditure or the lack of objection.
But is the assumption here we're putting it into the 27 numbers then? That was my assumption, is that after December, it would have to be in 27 numbers.
It would be in 27's number already, Chair, because we're going to carry forward the funds. So the committee's budget would be kept whole, but the hire is really in the new fiscal year. I think the balance is, do we go through procedurally the colleagues memo process and then have it very clearly coming out of this committee being terminated potentially December, right? So I think that's the first indication that we would need coming out of committee. Is the desire of the committee to recommend that we hold to the 6-month and then use the colleagues memo as a pathway for extension, or out of committee extending it through March? Because either way, we would need to evaluate the program and then also look at the fiscal impact.
I'm still back on, is this an expense in 27? Because I thought it was actually an expense in 26 that we're just using. So it doesn't hit the general fund in 27.
It's funded through December of 26 without impacting the 27 budget. Correct.
Yeah.
Yes, and I suppose if we wanted to stretch it a little further, we could carry 45,000 from 26 over into 27. Right now, we're only carrying over 30,000. Does that make sense? Now, keep in mind that also impacts the remaining balance in council contingency for 26. And I believe our last math, there was about 20 or 25,000. So if we use another 15, which is being considered right now, right, to extend it from 6 months to 9 months, the 26 budget that you all have available for different appropriations would be limited. So I wanted to make sure.
But a lot of that budget was spent on this pilot.
Yep, 30 out of the 125.
Yeah. So I'm at this point comfortable just ending it because in December, because that's what we authorized in terms of a budget. The colleagues memo, that's no problem. You can type that up and get it approved. So that's where I come out.
Well, I'm glad to hear you thinking that way. First, I'm not quite clear on why we would do something like this for just 6 months or whatever and end it. I don't think we ought to do it at all. And I made that clear previously. Our council contingency funds have been historically, we can look at the whole record over decades. They've been to really serve community needs that arise during the year. From nonprofits and special events, and serving the community, not serving ourselves. And this is for the council to serve themselves. And I think it's a complete break with the principle of it. And when we look at cutting other functions around the city or not being able to fund nonprofits, we didn't do that. Supplemental phase one, and a bunch of nonprofits that had a lot of merit are not going to be funded this year. But instead, we're prioritizing this. I think it is a bad choice, and I wouldn't want to answer to the voters to really justify that.
I mean, my point though is it's really not a 27 budget item. It's a leftover from 26. And when the 26 money is funded that council voted for, then that part should end. If we decide we want to extend it after the pilot, that's just a whole new.
Well, interestingly though, we had a brief discussion last meeting, and I haven't heard the clarification, but it was used the FY 26 council contingency was what was used for that. And I should make one other reminder. We had requested of the city clerk that she evaluate how clerk's offices in the area support council needs of different sorts, like travel support or whatever incidental need might be there. And she was nearing completion of that when this suddenly came forward and really usurped the process that we were near doing of hearing her report on how that support would actually occur and do so within her budget. But the notion that we can take 2026 council contingency funds and spend them in FY 27, I don't think is permitted under current policy. So the hire hasn't happened. And if it happens, it'll be nominally in this fiscal year. So I don't understand how we can even do that.
I thought we were cleared on that.
No, staff had referred to it as a practice, and I had said it back in May 5th that my memory was that it was an action that council had taken, but I didn't recall for certain, and there was going to be some research, and I haven't heard any follow-up on who's correct on that.
So I mean, I did do a fair bit of digging. I did not find an adopted policy. That does not mean it's not buried somewhere in some budget resolution, but I did a fair bit of looking. That said, it's whether it's a practice or a policy, it's really council's decision, in adopting the budget ordinance. It certainly has discretion to carry forward those funds if it wishes to do so.
Do you have anything on that, George?
I don't have a strong perspective. I think I'm pretty ambivalent about the need for the role. AI is getting pretty good at doing a lot of these things. Happy to share my setups. But this was the I mean, I don't remember how the vote went, but we did vote, or at least had some consensus in a study session to move forward with this item. So I think we should fund it through the calendar year, and that, yes, fund it through the calendar year, and do another colleague's memo, which, you know, maybe it turns
After
out we all love.
evaluation of the pilot, right?
Yeah, maybe it turns out we do love this, and I can certainly imagine ways where my workflow could be significantly more efficient. So, um,
There's a
yeah,
lot,
I
there's
think
a lot of things that we would need to evaluate, including can one person serve 7?
yes.
Or does it end up that one person is serving one person, you know, whoever the mayor is? And we don't know that yet. So, but yeah, so I'm still in the boat of I don't think this has a whole lot to do with the 27 budget.
Yeah, I'll just add that when we all were elected, we had a certain understanding of what our compensation was. And this council has added in the last couple of years international travel, which was taboo for compensation historically. And you know, I have traveled to visit our sister cities a whole bunch of times, found it fulfilling personally, learned some things that I brought back, but never had an understanding or that should be compensated by the city, and our taxpayers should be paying for my international travel that is discretionary. And now we're adding this on top of it so that council members supposedly need help in maintaining their calendars or submitting their travel expenses or answering their emails. I really think this has gone down 2 steps down a bad path that I don't think our residents understand and have paid attention to these changes, and that they would not like it as we're cutting all these other things, including we're looking at on public safety and at what pace we're going to be able to add back fire staffing. And instead, the council is prioritizing this. So that's my thoughts on the subject. I think we should rescind it, recommend to the council that we rescind it.
Any other comments? Okay, so I think the next one down is irrigation at Foothill, and I think we got clarification on that last time from Director O'Kane.
That's right. We wanted to put it in the memo, just so it's quick reference. I believe committee and council seemed to be fine, but there was still public concern, so we wanted to take an opportunity to make sure it's captured. Here to answer any questions, but I don't believe you might have any. I don't think there's anything that's different than what we've previously represented.
Yeah, she had perspective that it was a lot less and than suspected, and that we had already come back up from the to full strength. So the cuts were down from full strength, not down from already cut strength. I'm not saying that very articulately, but so I don't think there's anything new there. Okay, so then the referrals, moving over to the referrals. I wanted to raise the question of this consultant best practices narrative and get a status on that, because we still almost every week get resident input, and it's budget time, and they're looking at the number of dollars spent on consultants, and they have questions about it. So I'd just like to know what the feedback is going to be, so we have something at some point public to discuss.
Sorry, you caught me flat-footed on that, because I know we talked about it last week, but to give you a quick recap, after the break, we'll be coming back to the council with readout on best practices we've developed, both with our internal staff team as well as actually with the city auditor's input and a few other sources as well. So that's on the practices themselves.
Mhm.
That said, let me ask Lauren to elaborate on the actual contract contracting steps that we've implemented through this budget process.
Well, I'm also sure you scrubbed those
Yeah,
contracts to see
exactly.
what could be cut in the context of if we're stopping trimming trees. I'm sure we're looking at trimming consultants. So I want to give you
Yes.
credit and opportunity on that point.
Yes, so because I erred earlier today in understanding the question, may I ask you to repeat your question and concerns?
I guess it's twofold. One is let us know that you did scrub the existing consultant contracts for 27 and beyond, and make sure that they're appropriate, that if we don't have to spend all of them, we got a better way to do it. We're not doing it. And then secondly, I knew there was this consultant best practices coming forth from the city manager, and just wanted to get an update on when we would hear that in the context of the public. And
Okay,
the
super.
second one's been answered. Thank you.
Okay, super. I'm glad I asked the question. The answer to the first question, which is, have we scrubbed our consultant contracts? And the answer is yes. So as a part of the budget development, we've been at this for almost a whole year since last budget development, when committee and council made it clear that we're going to do reductions. So it's not just been in this spring, but we've been at this for a whole year. And so in this process, we've run multiple reports about like what contracts by what department for what purpose. We've sliced and diced it a variety of different ways. And then also between the departments and city manager briefings, we review all of the major contracts that support the budget appropriations. We say, okay, give us the top line of all the large contracts. What are their names? What are they for? Have we thought through whether or not, we can provide some of these services in-house? Have we switched from 5-year contracts to 1-year contracts? So we had all of those conversations. And so I do feel and represent to you that we've done a very thorough job.
Thank you.
I appreciate that update, and we've heard, portions of the progress reports on how we are tightening up our approaches, and that they've had some fairly significant impact already and will going forward. The problem is that we've got, and then the city manager said that we're going to have this report on best practices. And that's kind of a framework on how we are doing things going forward. But that really doesn't answer the questions that, okay, so what is the progress that we have done? How do we demonstrate the progress that has already been made, or the anticipated progress? How does that translate into dollars or other performance metrics? And I appreciate it's hard to quantify what you didn't do.
Or how much better it was than
that's
the
right.
alternative. Yes.
That's right. And so some of that may even need to be a more qualitative description. Now, whether that would be part of this best practices report and not just how we're framing, how we're doing things going forward, but what has been done, and whether it's examples or estimates or some combination of that, I think that's what's being yearned for by the council and the community. However real it may be, what's going on behind the curtain, and it's behind a curtain to the public and the council. It's a big open curtain once
Right.
you go up and you guys are debating everything. But how do we get from you guys working in this direction to the council and the public and the press understanding and respecting that progress has actually been made or is being made?
I appreciate the challenge, and I do think to a large extent this will have to show itself in what we present again after your July recess. If I could give one specific example, and it's always a little challenging because with any specific project, especially our high visibility projects, you either loved it or you hated it. But I will use the example of the turf study. And while there were certainly some criticisms of that work, I would say as a couple of examples, the consultant we used there implemented one of the practices that we're now institutionalizing for high visibility, high scrutiny projects, which is a detailed documentation of comments and responses to comments and how that's reflected in their product. And that one in particular, I know was very voluminous because of the volume of comments, but also very valid and technical comments. But they were very meticulous in ensuring that those were responded to and documented as to how that then reflected in their final product. And I think that's an example of how one area of, we'll call it pain point in consultant work, not reflecting the feedback from community members has been, or in this particular example, was reflected in the product. Another example of what we are building into our best practices is post-engagement evaluation, which has been a sensitive topic because documentation of a negative rating can actually create some problems for us with claims or again, the consultant themselves feeling that that was unfair. So we've tried to strike a balance in how that's done, but has now also been incorporated in our practices. And so examples like that, to Councilmember Burt's point, is hard to quantify how much that saved us or how much better a product and what that means in terms of dollars. But again, I think are examples of what you can expect to see and that we are putting into place to reflect the fact that there's a responsibility on the city staff in how we're reinforcing accountability, as well as the consultants themselves and how the work itself is conducted.
Well, I think you touched on an area that I wasn't thinking about so much, which is not just cost savings, but qualitative improvements. And I agree that there are really two halves to this. On the cost savings, and we've got, right before this item is the AI strategy. And I think it's been perceived that this is one of the components of our future on how do we obtain domain expertise that we historically paid consultants for, and with a concern that they sold the same expertise multiple times. And with AI, we really are seeing that, albeit with the necessity to scrutinize, but we are seeing real value being generated highly efficiently, in particular in that sort of area. What's the generic information that is there? And then we build off context and other more specialized information. So I would really encourage embracing that. And to what extent is staff being trained to be able to do that themselves? And examples. That's an area where I would think we can find examples, whether it's in legal department or other areas where we are already seeing staff being able to obtain that. I can tell you as council members, we have issues that we want to understand a context on and a background and what happened over the last 10 years in this area. 60 seconds later, we've got it. And it's informative. And then you go to the reference documents. You don't blindly assume that it's all hallucination free. But it's really progressing at such a rapid rate. I would encourage those two items of referral to have an interconnection. Yeah.
I'll refer to the clerk to capture all that.
Okay, any other of these items on the referrals on table 3 that anybody wants to chat about?
Well, I didn't see approximate time frames on all of these. Do we have that on when we get the referrals coming back?
Starting at the top, all the way down to number 7, or anyone in particular?
Well, really, it's a whole set, and maybe what we would, if you have it now, great, but if we have as this a column on this table is when's this at least going to have a next step as opposed to necessarily completion? But
Yeah, I think that's part of the process as we move through the process with council, like council, usually, and again, I have a more formal understanding of our use of the word referral. I know, committee member Bert, we have, you have a different interpretation. So the way we've done it before was we take these referrals to council. Council may agree that these become staff work plan, and then we indicate kind of some next steps and timeline, and whether or not some of them come back to finance committee. Some of these are obviously coming back in the next budget development, or some of them might come back to PNS. So we don't necessarily have a timeline on each one of these specifically. If you want, we could attempt to, like at the top, AI strategy. I believe that's already underway, and I don't recollect all of our council committee, council priorities and objectives. Is that one of them?
No.
Okay.
It's not formally at this point, and so that, again, is something we're working through with IT. So we don't have a specific deadline. I mean, certainly it'll be this calendar year, but not anything more specific than that.
well, let me ask under this question of, are there ones among these that you are under the understanding need to go to council for their endorsement in order to proceed on?
I don't think so. Not the way that they are written.
Okay.
And so, I think we're already working on the AI strategy. The consultant best practice is currently being captured by council priority work plans. The golf course P&L is something we're going to want to incorporate in fiscal 28's budget development, because every year we look at all of these enterprise funds or quasi-enterprise funds and make sure that we're looking at the revenue side. And so that's really important. I think what we heard from this committee is there was historical context to a senior residential rate, so we need to evaluate that more. So that one there will be interesting to see, because the next time we bring that back might be in the next fee setting, which will be spring of next year. So that's going to be in the course of our budget development exercise. I think the Coverly stuff is going to come out of the Coverly ad hoc and the work plans that comes through all those committees anyways. And I think the number 6 and 7 are already identified as 28 budget development. So I think on May 5th and 6th, committee was adamant that we capture these. So staff focuses on this work. And so that's, I think, why, Pat, you and I had a difference in understanding about the word referral. So I don't see at this junction any of these are what we typically would refer to as formal referrals. And if committee agrees, then we can just make a note of that.
Yeah, I think that's right. On Coverly, I actually had that circled and forgot to bring it up. These were emphasizing the short-term repair that would be soon. I'm not saying it has to be 27, but there's some things. I had a prominent citizen say to me the other day, "Could you just fix the bathrooms at Coverly?" And so I don't know where that is, if it's in maintenance instead of capital improvements, but some of those simple things to make it a more pleasant place in the real short term is what's being referred here. So it's correct. It's not a formal referral, like, give us a budget for next week, but it's short term.
Yeah, just speaking to the Coverly repairs in the capital program, we do have a Coverly repairs project. I think it has relatively significant funding in it. Currently, the way it's being used is just repairing things that need immediate repairs, as opposed to going out and proactively identifying projects to do there. I think it may have come up during the initial general fund capital program discussion, but we are currently looking at some cost estimating on renovations to existing buildings that would not be replaced as part of the Coverly Master Plan. Part of that also includes looking at the number of bathrooms that would be needed, site utilities that are serving those existing buildings that will remain, and trying to identify, well, that will help us identify whether there are some of those items that we should prioritize to start working on sooner.
Is that starting up already, or is that in a 28?
The cost
CIP.
estimating work is starting about now.
Okay. Again, I was just wondering if there was. I'm more familiar with PRC stuff than I am with your stuff because I was on PRC and I worked on CIPs a lot. I'm just thinking, I mean, if it's replacing a toilet, that's not remodeling a bathroom. So maybe that becomes into a repair, not a CIP. I don't know, but those are the things that I think somebody should take a tour, maybe you and Director O'Kane, and just say, is there stuff we should really be looking at now?
Yeah, items like that would probably be relatively simple to proceed with.
Yeah.
But what I've heard about the restrooms is that they're overall in bad shape with uneven floors and cracked tiles and, problems with walls and things like that, where we thought it would be a significant project to renovate them.
Mm-hmm.
But I agree that if there are small things like replacing faulty equipment.
Yeah, and there's always this question of, what's that scale? You got bad bathrooms, and maybe everybody recognizes they're going to have to be completely redone. Does that mean we don't do anything until we completely redo them? And I don't think we know the answer to that, but anecdotally, I've heard from a number of users at Coverly, they point to the restroom situation. I've been meeting to go down there and see it myself to know what they're talking about. But I will say, when it was said, well, that the Coverly Ad Hoc had talked about this. Coverly Ad Hoc a year ago had asked for nearer term, we'll call it sprucing up measures there. And to our knowledge, nothing has happened. So we don't need to go back to the ad hoc, I think, to get that direction. For some reason, it hasn't translated into practice. And I'll just remind everybody that, we're maybe in some ways wanting to look at, do we take that Coverly Infrastructure Fund and allocate it toward major things? And but if you'll remember, it was just 2 years or so ago that I came to realize that fund had been rated to be used for routine custodial work there, or half of that annual dollars was being used. That had happened 6 or 8 years ago, and that was contrary to how that had originally been set up. And we've since corrected that. We didn't recapture those dollars that were used for maintenance over, I don't know how many years, a few years. But we just haven't been spending that fund as it was designed in 2014 for finally having funds to do some significant things at Coverly. And we're accumulating dollars in it and accumulating disrepair at the same time.
Okay, I think that's it on that slide. So do we want to look at open items that we have to come back on? Or at least maybe if we don't come back and have an extra meeting, then we have to list them as open items when we go back to Finance Committee. We have the some sort of recommendation on flexibility for police to.
May I make a suggestion?
Go ahead.
Super. So typically in these wrap-up sessions, we move the items to the formal Finance Committee budget adjustment. So one option is, on slide 2027, staff attempted to rebalance and incorporate what we felt committee might want.
Right.
A few of those items from parking lot went on that already. So coming out of this committee, you could finalize the budget adjustments. And it seems like we cleared everything from the parking lot so far, maybe with the exception of Cumberland, where we had a lot of conversation about. And the referrals seem like we've clarified that those are really a part of fiscal 28 budget development, or they're already incorporated in the council priority and work plan. And then the AI strategy is work already underway. So I think in the conversation about referrals, it kind of sounds like there are no specific referrals. So I feel encouraged by this conversation that we as a committee can move forward with a recommendation.
Yeah, I think we can. I was just going to go to the open items because we don't know yet about the transportation staff because we have to get the funding number for that.
Oh, okay. So you want to, by process, go through the open items and then solidify the recommendation. Okay, I'm fine with that. Yes, it seems like we heard that we need more clarification on the ongoing funding of the conversion of the halftime to full-time.
Mhm.
And we don't have that at this time.
Yep.
So
And then the second thing was however you want to characterize canopy, but we need more specificity on the, proposed cuts and.
Well, and the cut no more than $15,000 pending discussion with Canopy.
Yeah, that's, we haven't acted on that as a
Yes,
committee.
we need, that was not a motion. That was the last idea in the.
You want to make a motion?
Sure.
Do we want that now or do we want the list?
characterize some of the parameters around the reduction, and we can try to capture that. To the extent we could capture it in the conversation and the negotiation, then that would be helpful.
Just to be clear, what should the scope of my motion be? Because I have a laundry list of notes, including about the administrative assistant funding through the calendar year, other things that we talked about and we just touched on and maybe got a consensus on, but we didn't actually make any motion.
I'm trying to get to that now.
Okay.
These
Okay,
things
you
that
go for it.
weren't in their original started at $800,000 loss, now we're balanced. I want to talk about the things that we still have to talk about that could affect that balance.
Chair Lau, and if it's helpful, I have a running list that I'm happy to put up on the screen. And then if folks caught things that I missed, I would really appreciate that input. Thank you.
Great.
Thank you for keeping track of us.
Okay, so on the first one, the X's are appropriate because we don't quite have that yet, right? Because it's not funded.
So I got clarification that we can actually fund staff for traffic congestion relief using the Measure B local streets and roads. So I think in terms of this coming year, we have clarity that there would be a 40,000 difference and that could come from LSR.
Come from what?
Local streets and roads, Measure B.
Is that where you guys are too? The 40,000 and
My preference would just be that you say, because we also have to change the table of org, that you say, add 1.0 FTE assistant engineer to be funded with an additional $40,000 of Measure B in fiscal year 27.
Sounds good.
And we'll remove the temporary halftime position. So minus 0.50 temporary plus 1.0 FTE full-time.
I think I just want to clarify, is this only for fiscal 27?
Yeah, that's a good question.
I think it would be. Okay. My hope is that it is an ongoing role that can continue to be funded with Measure B or potentially general fund. Yeah, it's just a role that prioritizes traffic safety and calming type of projects.
So in terms of including the words Measure B, local streets and roads, then I think that we need to clarify that it can be partially funded by local streets and roads. For example, the OSV portion can't use that funding.
But we still think that the net impact on 27 is 0 now or 40?
Would be 40,000
Okay.
in fiscal year 27.
Okay, so that should be up there.
With the funding mix in future years to be finalized.
On the broader motion, there were also a short list of items like the Chamales bike right-of-way where we expressed the desire to clarify for council that work was going to happen in 2020, FY 2027, for example, and that the grant work was going to yield capital and planning costs in FY 2028. And I think those are really just clarifications and communication tweaks. I'm assuming we don't need any of that in the motion.
Correct. We
Yeah.
heard that. We'll include it in the memo.
Yep. But there's a short list of that, like including for quiet zones, including for AI inefficiency, how that gets brought back. That's what I have on my short list for that.
Okay, on the second one, could we do a little bit of a different wording? Just whatever, adjust canopy contract with a target of 50,000 cap of reduction or something like that. Because it might come out 17 or 20 or, I mean, we don't know what.
Yeah, we could just say a target of a $15,000 reduction in canopy.
Chair Lowry, would you like me to get rid of the of no more than? I just want to make sure I'm capturing your intention clearly.
Yeah, it would omit the no more.
Yes, good question. And the answer is yes. Does 3 work, Ed, for the police?
Yes.
Or do you want something more
No
broad?
budgetary impact.
Right.
It's kind of once again a clarification.
You're talking
in
about
the
flexibility in
Yeah.
budget dollars.
It's fine.
Oop, Mike. I'm sorry. Oh, sorry.
To bring the subsequent actions on consent, I don't see this as precluding that. I was actually stuck on number 2. I want to make sure that staff is clear that it's a reduction of 15,000, not 15,000 less than the 40,000 that was already in the proposed. So we're clear. It's 15,000 contract reduction. Right. Okay, good.
Correct. So in this case here, because this action should be relative to the proposed budget, we're adding back
Okay. Glad we're talking.
$30,550.
Approximately. saying it.
Because originally the reduction was 43,550. And now we're going to reduce it by 15,000 only. We're amending the proposed for the difference.
To add back, right.
So I don't know
30,000.
who's got the math real quick, but clerk should be putting that in. Yeah. 550. 28,550 is the fiscal impact.
Well, not exactly because we're saying a target, but yeah, I mean, what the whole thing was, it was going to be approximate.
I'm not a math person. What should I change?
It was 45 and now it's 15.
It was 43,550 was the original reduction amount. And so if we're reducing by 15, the net reduction would have been 28,550 from what we proposed.
Are you okay the way it reads? I think it's accurate the way it reads. It's fine.
Yeah.
Fine.
And you don't, on 3, you don't want anything about flexibility of
No.
recruiting
no,
effort.
I
Okay.
think it's clear. We know what we want to do. And
But you definitely think this needs to come to council.
well,
You can't just work this out with the chief.
the future actions need to go to council. This recommendation from the finance committee, I think is discretionary as to whether you want to include it or not.
Okay.
And I think on number 4, rather than terminate it, because that sounds a little more definitive than you intended, it's make no change to the administrative assistant.
Well, I'm still wondering why this is even on here because it's a 2026 item that's a carryover. I don't really understand why we're addressing that as part of the 27 budget proposal because this isn't 27 budget.
But I mean, to Councilmember.
I apologize. Would you turn on your mic, please? Thank you.
Sorry about that. To Councilmember Burt's point, you could, in this motion, authorize the carryover of the 26 funds to fund this position through December.
Oh, is your opinion that we need to authorize it?
I would recommend that just because of the past practice.
Okay.
And that the budget ordinance would be appropriate vehicle to authorize that carryover if
Okay.
council elected to do so.
And if that's the case, I'd like to separate that as part of the motion. Okay.
Well, I think the wording is a little bit different. Fund the approved administrative assistant to city council with 2026 funds through December of 2026.
And that latter part, did you want to include the and evaluate options or just leave that off at this time?
You could say evaluate the pilot at that time.
Can you peel that off?
Yeah, I want to see if there's more than just these.
Yeah, there were 2 others. One, Brad had spoken about transferring, if I understood it right, the 250,000 unexpended for the Mitchell Library repair to is it a Roth building fund, did you say?
It's a Roth building CIP project, and
Okay.
I can provide the CIP numbers for both
Okay.
of those.
And then just, I don't think this needs to be in there, but I did want to make one more comment on this quiet zone funding because qualifying for the Measure B CalMod, I think, is dependent on whether it is can be demonstrated as a safety improvement project, and or largely dependent on that. And Caltrain has not historically viewed quiet zones as safety improvements. I think we need to actually include the references to the FRA wording that my understanding and recollection is that quiet zones are approved by FRA as safety improvements over horn blasting. That's their view. And so I think that strengthens our argument that it's a safety improvement. So referencing the FRA requirements, and I can't remember where that is, but that I believe that is their premise in a quiet zone. Yeah, which Michelle doesn't agree with.
Okay, that means to the next. Brad, I think you have number 5.
Yeah, I'm working on that.
On 5, I had also thought that we know the money is there. We know that we have a buffer, but that we want to see how some steps develop with bids, with the museum's ability to partially fund before uh, dedicating funding in such a visible and committed way. Though, of course, we would want to be partners and support waterproofing. So I'm I am ambivalent on whether 5 is explicitly listed as a motion, but that was in the back of my mind, and I hadn't anticipated it would be added.
But I think Brad clarified that this is kind of a placeholder account. It is not committing us to spending it for that purpose at this point in time, but it's created a placeholder.
You can say if needed.
That's correct. And that was my understanding that, I mean, there are discussions we need to have about even how this work would proceed, who would manage a contractor. It could be the city, it could be the museum, it could be both for different scopes. So there's a lot there to still work through.
I'm not even sure you need to put the 250 in there, right? That's just the fund number, but do we just want to show that there's enough? Is that why you want that? If necessary, access up to 250,000 from the Mitchell Park Library? Do we want to go that far? Is that change our negotiations or
Well,
anything?
I think it is helpful to really do the budgetary step of putting it in the proper project.
Okay.
And again, though, if needed, gives us sufficient flexibility to come back and give you a specific recommendation.
Okay. So if needed comes after 250,000.
Okay.
And do we want up to 250, Ed? Or do we care about that?
Well, I'm suggesting moving the 250, again, this doesn't.
Okay.
Yeah.
Commit.
Yeah, if I can make one clarification, Roth Building Rehabilitation as a CIP project is not an account that belongs to the History Museum in some way. It's a city capital improvement program project where we have discretion about whether or not to expend funds.
Yeah,
So just
great.
putting funding there doesn't mean we've committed that we're putting it into the project.
Yeah, we can pull it out for some other project if there's a good reason. Yeah.
Did you have another item, Pat? Okay, George?
No.
Lauren, did we miss anything of stuff that we are still open items?
I just want to make sure we're clear. Pat mentioned the seeking the Measure B CalMod funds. We have clarity that we will follow up on that with Caltrain and VTA. Okay.
I think we should put what's now number 4, 5.
But I asked if you'd separate that.
Yeah, no, I will. I'm still trying to fiddle it. I'm just not loving this language here. I think it's fund the approved city council administrative assistant pilot program. Yeah. Yeah, I think that states it more clearly. And for voting purposes, Councilmember Burt wants that broken out as a separate vote.
To clarify though, the motion I'm assuming should also include the prior committee recommendations. So,
Yeah. Yeah.
Yeah, Lauren, I mean, I would suggest that you add in kind of, B1 and 2 from the staff report recommendation, and then these would be the modifications to that.
what is B? I'm
It's
sorry,
the-
did you
it's the
say?
adopt the 2020, the recommendation to adopt the 2027 budget, and approve the 2027-23 CIP program, with these modifications.
Correct. However, as typed, those are only additives to table 4. So, table 4, needs to be incorporated in the motion. And then also it's slightly different because we would want to rebalance. So if we refer to tables 4, or, slide 7 from this afternoon, slide 7 includes the prior direction from committee, right? That includes JMZ, crossing guards, track watch, OSV, quiet zone, tremolus, and the technical adjustments. So, okay, so I think clerk is incorporating it by way of the reference up there. And then committee, because we modified the budget for the engineering position and then also for canopy, I would recommend that the motion also includes in there that the rebalancing comes from CIP. That'll enable us to expedite this without having to retype everything. Does that make sense? Because we just modified it by those two appropriations. So if you're okay with that
Yeah,
concept,
where do you want that to go?
probably number 7 underneath there, clerk. And I think that's okay for us. And rebalance the additional appropriations above, rebalance the general fund additional appropriations through reductions of transfers to CIP. So that's about 70,000 or so based on the 2 items above.
And
there's,
are we on the same thing on number 6?
yeah.
We're going to suggest that the if needed move back to the end, and in fact, perhaps better in case needed. So the transfer will occur, but the expenditure will only occur if in case needed. Does that make sense?
Yep.
If committee is okay under 1A, clerk, if you don't mind, the technical adjustments in parentheses to date, because on June 15th, we will have technical adjustments for like reappropriations and such. So that would be helpful. It is silent about the referrals, and I'm wanting to confirm that that's because I think we've talked through all of them. Some are coming back as finance, budget development items next year. So I see, that's good.
City manager, you mentioned in case needed for the transfer the 250,000. At what point is that decision made?
Scope is defined.
So
The transfer will
appropriation,
occur.
the transfer will happen, but the actual utilization of the funds on said project will be based on the work ahead.
Okay, thank you for clarifying. So the transfer will occur, just the work won't happen until further approval.
And the defining of the work
Uh,
is yet to.
Okay, and scope to be defined.
Yep.
Okay, thank you.
Let's just go over 4 again. So the original cuts to the canopy relationship were 43,550. And now it's potentially going to, it's targeted to go down by 15K.
It's targeted to be 15K. So instead of 43,550, 15K is how I'm interpreting this, as opposed to reducing the 43,550 by 15K for a new target of roughly 28.
I'm glad I asked.
Are there adjustments you'd like to make to that number, Chair Lowing, to make that more clear?
It's okay.
And then also to be technical, Clerk, if you scroll down, do we have the recommended actions such as the memo that talks about recommendations to City Council to adopt the 27 budget, including the 27 municipal fee schedule?
First line.
Is that not number one?
Perfect. Thank you.
I don't think we've left anything out that we talked about, but I'm looking under the table and things to see if we lost something here. Okay. Then let's have the clerk call the roll separately, obviously for the second item.
We do need a maker and a seconder.
Oh, we need a motion, don't we? I'm happy to move the original motion. And a second?
I will second that. And you guys have to do the other one.
Okay, we'll just vote on this one first.
Okay.
We vote on the lower one first and then include that in the second, right? Maybe not. I thought
I don't know.
that's how it's done.
They're just completely separate, so.
I think you could move the last item separately.
Yeah.
Yeah.
Okay, the first motion.
Right. So taking action now on numbers 1 through 7.
Yes.
And for clarity, let me renumber 1 to 8.
Really? Or would that just be one under the?
Leave it alone. Just leave it alone. All right, 1 through 7. Councilmember Liu,
Yes.
Councilmember Burt,
Yes.
Councilmember Lowing.
Yes.
Motion carries unanimously.
Okay.
And now
We need a motion. The second one. When we get down to that. I'll go ahead.
I'll move the second motion.
I'll second.
Councilmember Lowing,
Yes.
Councilmember Liu,
Yes.
Councilmember Burt.
No.
Motion carries 2-1, Burt no.
Okay. Thanks, Christine. This has been a challenging session and you've handled it very well. As did staff. So, next steps. Come see you in June.
We come back to council on the 15th with these recommendations, and thank you so much for all the hard work and the deliberation. You've added a lot of value to our budget process, and we appreciate you.
Okay. Thank you very much. We stand adjourned. Thanks, staff.